All right. Hello, everybody. Welcome back to another episode of The Market Close. We are starting earlier today because there's a lot of stuff to cover. I feel like the more this year evolves, the more the market close is going to start early and early and early. And it's just inevitably, it's going to probably end up starting at like 3:30, then 3 p.m. every day. But yeah, we have to go live early, even if it's just a couple minutes, because we got a bunch of headlines to go through. Also, we have a lot of earnings. So at 4 p.m. in about 15 minutes, we're going to see all the different earnings that we've got going on. And those earnings are obviously going to be really important in the semiconductor space. We got a bunch of companies reporting there, the software space, a bunch of companies, and then some retailers are also going to be reporting as well, along with some food companies. So we got a lot of earnings to look at 4 p.m. Now, there's a major headline that is the title of the stream, and that has the two faces on the thumbnail of the stream that we got to get into. But before we do that story, because that's going to take a second, I want to get through really two quick headlines. Jeremy did sell all of his Tesla. For those that care about the moves Jeremy makes, he sold all of his Tesla. He posted that today. So yes, we do have some people that were selling their Tesla based on that earnings. I mean, it was a crappy earnings. Would I sell all my Tesla right here? I mean, I kind of think we're just getting started with FSD robotics, but yes, obviously it's trading at an aggressive multiple, and his average was at $13. So he ended up selling the final 700 shares, I believe he had in his portfolio. All right, two headlines real quick, and then we'll get into the real breaking news around Scott Bessent and Elon Musk. First headline, the Trump meme coin. Yes, that's real. That's real. So we ended the market close with, or the market open with this headline that Trump's going to be inviting 220 holders, the top 220 holders of the Trump meme coin, to a private dinner in Washington, D.C. on May 22nd. I can officially confirm via the Trump meme coin official website that this is true. This is happening. As you can see, the meme coin right here was up 35%. I don't know if it's still up 35%, but it was up at one point almost 50%. So if you got in at $9 yesterday, you got a 50% pump right here. So yes, that is a real story that's happening. And apparently at the end of May, if you are one of the top 220 holders of the Trump meme coin, which I think you need from the calculations I was looking at, you need about 300 grand of Trump meme coin to get invited to this dinner. Then you will have a chance to have dinner with Trump. The other headline, which broke in the morning open, but I missed this news, and it's a big one for all my Grab folks. It's a big one for all my Grab folks. Grab just added Steven Tishman to its board of directors. Now, who is Steven Tishman? Well, apparently he is a veteran investment banker specializing in M&A. Specializing in M&A. So for those that are in Grab, this is one of the biggest updates we got in the past couple of weeks. Grab acquired some companies. We saw some other headlines with their new product events. This right here is the only one I really care about. The fact that they put an M&A investment banker, mergers and acquisitions investment banker, on the literal board of directors. There's only 8 people that get to be on this board of directors. Steven Tishman is one of them. I think this means there's a good shot they are really getting ready to buy out GoTo, which is probably going to be a $6 to $7 billion merger. And that would be massive for their margins, for their free cash flow, for their revenues, all that stuff. They have earnings next Wednesday. So that's going to be a very, very important earnings. And yeah, hopefully that means we get ready to acquire one of our biggest competitors. So those are two updates right there in the context of the Trump meme coin and Grab. Okay. Let's get into the biggest story of the day. This story is not going to be that surprising for most people, but it does confirm why Elon Musk unfollowed Scott Bessent a couple days ago. And everyone was speculating, why did he unfollow him? What's the beef going on? What's getting so, why are things so aggressive? What's happening? And apparently, and this has actually been confirmed by the White House, we'll get to that in a second, but Axios reported an hour ago that, well, I'll just read from here. Elon Musk and Treasury Secretary Bessent reportedly got into a loud, heated shouting match in the West Wing last week, right in front of President Trump, over who should lead the IRS. Remember, Elon wants a certain person to lead the IRS, and Bessent wants someone else to lead the IRS. And for some reason, they're both really passionate about who gets to lead the IRS. The two clashed over the appointment of Gary Shapley, which was Musk's pick, versus Michael Folkender, which is Bessent's, with the dispute turning personal and fiery. Musk accused Bessent of being a Soros agent, while Bessent called out Musk for over-promising Doge-driven budget cuts. Both of them really went at each other's souls right here. Sources say Bessent won the round after Trump ultimately backed his choice, but tensions remain high. Now, how do we know this is not some fake news headline? How do we know that this is actually real? Well, the White House responded to it. Press Secretary Caroline Leavitt said, Quote, there are disagreements sometimes at the White House. That's a part of any healthy debate and policy process, and everyone here knows they serve the president. A reporter followed up with her about, hey, so who's going to stay, Bessent or Elon? And she said, quote unquote, well, they're both here, aren't they? So the White House is saying, well, they're both still here. So Trump didn't kick any of them out, even if he picked Bessent over Elon on this battle in the context of the IRS. But he did not kick any of them out. As a result of that, we are experiencing some volatility as we get into the final 11 minutes of the day. Palantir still holding 100, up 7%. We were at 103 at one point. Didn't get back there. Robinhood cannot get back to 47. Right now, we're at 44. Rocket Lab at 20.26. HIMS is still up 5%. I mean, it's still an incredibly green day. Bitcoin at 93.5. You got Reddit that's up 5%. Vertiv still up 8% on the day. Nvidia still up 3.4%. It's just not as blistering green as we had during the first 10 minutes of the market open. And another reason why we had a decent chunk of volatility outside of the news around Bessent is the press secretary saying this about the China tariffs.
Let me be clear. There will be no unilateral reduction in tariffs against China. The president has made it clear China needs to make a deal with the United States of America. And we are optimistic that will happen. And when that continues, it'll be up to the president what the tariff rate on China will be. But we certainly need to see a reduction in tariffs and non-monetary tariff barriers from China as well. And we also need to continue seeing these companies abroad return their manufacturing to the United States of America, so we can shore up these critical supply chains.
Okay.
So at this point, dude, I don't even know what this means. And if anyone wants to explain this to me in the chat, please do. But the headline is the White House says there will not be a unilateral reduction in tariffs on China. Like, I guess my best is that we're not going to reduce tariffs unless they reduce tariffs. Is that what unilateral reduction of tariffs means? Because that is not what it sounded like when Bessent said, or not Bessent, when Trump said yesterday that we are going to be walking back the tariffs from 145%. S&P 500 right here up 1.6%. Again, it was at 545 right now at 536. Looks like it's going to close above at least 1% on the day, but we got 10 minutes left to kind of see how this plays out. So, okay, you guys are saying what I was thinking in the chat as well. No reduction before trade talks. So it seems like no unilateral reduction in tariffs essentially is pointing to this idea that until China also reduces some of their tariffs or potentially gives us a concession, whatever it may mean, we are not going to unilaterally, which from my understanding means by ourselves, reduce tariffs. Which, I mean, I'm just happy that didn't literally tank the markets, because that technically contradicts pretty much everything that Trump was saying yesterday. So I think the markets are looking past that enough to be like, okay, we're not, literally going to get rid of tariffs, but we are definitely setting the framework to begin reducing tariffs, which is good. But as Ray says right here in the chat, it is confusing AF. Like when I saw that headline, markets were down a little bit, but we didn't really tank. Like even Tesla right here is still up 6% on the day, even if it's down from 259. But it was a headline that I think even the market, even the algorithms were like, what does this mean? Like even the algorithms were like, okay, is this bad? Is this good? Is this kind of good? It means we're still negotiating harder, but we're definitely not getting rid of all the tariffs. Like no one really knows. At least we are keeping some of the green right now, which is what I'm happy to see. But those were the two main headlines: the Bessent Elon dispute, which look, I mean, at the end of the day, they're both still part of the White House, even if they don't like each other. So hopefully there's not too much harm there. That headline, along with this unilateral trade restriction in the context of China for tariff reductions, were the reasons why we're losing most of the gains, even though we're still holding up a decent amount of the gains because we were so green. I mean, we were so green at like 940. We're not that green anymore, but we're still green, and I'll take it. I think everyone will take at least somewhat of that green, even if a lot of it has to go away. So yeah, another day with the volatility. Ed Yardeni described it as being on a roller coaster today. I mean, he said, where's my neck brace? Because it is just so much back and forth. It's hard to keep up with all of it. Ken Griffin was on a speech today, the manager of Citadel, and he had this to say. He is obviously not not happy with what's going on right now, and he feels America's brand is getting hit based on how this is playing out.
The markets are, obviously not liking what they're hearing. Treasuries in particular have seen a lot of volatility and worries about dysfunction in the market. What is that doing to the American brand?
Well, okay, you actually picked exactly the right word. The American brand. right? The United States was more than just a nation. It's a brand. It's a universal brand, whether it's our culture, our financial strength, our military strength. America rose beyond just being a country. It was like an aspiration for most of the world. And we're eroding that brand right now. And if you think of your behavior as a consumer, how many times do you buy a product with a brand on it because you trust that brand? You know you could buy like a similar dress with no name for less money, but you want the dress that you think is going to not fall apart in 2 weeks. You want the handbag that you think is well made. You want the television that you know that when you turn it on, it's going to work perfectly. You want the car that when you turn the engine on, it's going to run. And when it comes to money management, for example, there are many great American institutions whose the power of their brand, that they will deliver a fair service at a fair price, that they'll do well by their investors and put their investors' interests first, whether it's a BlackRock or Fidelity. These are global brands of immense power. But in the financial markets, no brand compared to the brand of the U.S. Treasuries. U.S. Treasury market, the strength of the U.S. dollar and the strength, the creditworthiness.
So he's basically saying, hey, the tariff volatility is degrading the U.S. brand. He mentions treasuries right there. Speaking of treasuries, our little friend is coming back and she's not happy. 4.385. This thing was at 4.29 at basically the market open. At one point today, it went to 4.4. As you can see, it's very close to 4.4 already. Again, the bond market is king. That's one of the biggest, learning experiences I've had over the past couple months, is trying to understand what's going on in the bond market. 30-year right here, getting a bit closer to 4.9. Why is the bond market going up right now? Because investors, again, continue to be worried. And this kangaroo game of back and forth. Is it green? Is it red? Do we have trade deals? Do we not? Do we have tariffs, or do we not unilaterally reduce them? Like, it's creating so much pressure and so much volatility, even if we've had a incredible buying opportunity. That buying opportunity might end up coming again based on the nature of this volatility, even though we're holding on to some of our gains. So obviously the market right here, not really happy with what's going on. S&P 500 looks like we're going to end out on the day almost 2%, 1.85. We got about 5 minutes left, getting a little bit of buying pressure as we get into it. Again, Tesla 252. Palantir, I think, is going to get that $100 close. It's at 101 right now. It'd have to lose some momentum to really close below 100. So I think we're gonna get it. 100.94. Then you got Robinhood at 44.72, Rocket Lab at 20.33, and then you got HIMS right here up 5%. SMCI as well. Great day, 7.6. We have a lot of earnings after the bell. We have ServiceNow, we have Chipotle, AMD, not after the bell, but they're up 5% of the day. We have Discover Financial, IBM, Lam Research, and Texas Instruments. So a ton of important companies. We're going to see if they can beat and continue the trend as some of these other companies have done already. And if they can, hopefully we continue to have a decent earnings season. Google is going to be tomorrow, and that's going to be the big one to look out for. Trump is speaking at 5 p.m. That is correct. So I'll be live. We'll cover it. We'll see what Trump has to say. Let's get a quick news update, and then we'll have the market close in about 2 minutes.
Javers in the center of it all from the Chinese, saying if a negotiated solution is truly what the U.S. wants, it should stop threatening and blackmailing China and seek dialogue based on equality, respect, and mutual benefit. To keep asking for a deal while exerting extreme pressure is not the right way to deal with China and simply will not work. Now, I can tell you, I just spoke with Caroline Leavitt, the White House press secretary, in her office a short time ago to get her reaction to that. And what she says is the president has said that he's not going to unilaterally reduce tariffs, and the world is finally paying attention. The administration is consistently in touch with our Chinese counterparts. And I asked her about some of the confusion throughout the day as to whether there are talks, there aren't talks, because we had Treasury Secretary Bessent saying there were no talks yet early in the day. Then we had President Trump out here on the North Lawn later in the day saying, well, there are active talks. So what does that mean? Caroline Leavitt says that Bessent was saying that there are no talks between the two heads of state. And actually, there is a set of talks at a staff level, she says. And that brings me to this fight that's just been reported by Axios between Elon Musk and the Treasury Secretary, Scott Bessent. They report a shouting match in the West Wing over who's going to control the IRS. And a witness, according to Axios, describing it as almost a WWE-type environment. I got a statement from Caroline Leavitt about that as well, which we can put up on the screen for you now. She said, look, there are disagreements sometimes at the White House. That's part of any healthy debate and policy process. And everyone here knows they serve the president. I asked her who won the fight, and she said, well, they're both here. Scott? Yeah.
For those just joining, if you rewind about 8 minutes, we covered the Bessent Elon shouting match story. Elon wanted one guy for the IRS. Bessent wanted another guy. They ended up getting into a shouting match. The White House basically confirming right here that, yes, there was a shouting match, and Trump picked Bessent's pick over Elon. That's probably why Elon was annoyed and unfollowed him on Twitter on Friday. But both of them are still there. So, it's not like Trump kicked out anyone from the White House. There's just a disagreement between both of those people in terms of who should lead the IRS. So it was funny, though. Elon called him a Soros agent. And then Bessent said, you promised so much on Doge and you're not following through. Like, both of them just went at each other's souls and tried to find the meanest thing they could think about. And he ended up getting a shouting match. So, yeah, a little bit of beef in the White House. I'm sure there's been plenty of beef in other administrations in the White House, and staffers disagree with each other. But in this context, Bessent ended up winning for his IRS pick. All right, cool. We got about 30 seconds until the market closes. Thank you, everybody, for being here. We have a ton of earnings to look at. We will see what happens on these earnings. In about an hour, Trump will be speaking. I'm sure he'll be clarifying some of the stuff in regards to the confusion on if the China tariffs are going away, if they're not going away, if they unilaterally need to go away. And so after hours, we will probably see a little bit more volatility as we've seen throughout the entire day. Wednesday, April 23rd, 4 p.m. Eastern. Thank you, everybody, for being here. The stock market is now closed. All right, there we go. Markets are closed. Another day is finished in Q2 for stock market trading. S&P 500. We got to 545 at one point on the day, up about 3.2%. We end the day up 1.5. I'll take it. I will take it. I mean, obviously, it would have been amazing to be up 3%, but it's not horrible to be up 1.5%. S&P 500 right there, 535, ends out the day 1.5%. Not bad at all. SoFi up 4% of the day. I think it was at 1235 at the highs, right now at 1174, so not too bad. Tesla, it wasn't a good earnings. We all know it wasn't a good earnings. So the fact that Tesla's up 5%, I mean, I think if you're a Tesla shareholder, you can't be that upset. 250.74 on Tesla, up 5.37% on the day. Bitcoin right here, 93,000.6. PayPal was up a little bit on the day, 1.69%. Snapchat was up about 2%. Disney was up about 1.37%. We also did get a Palantir $100 close, up 7.27%. It has taken a couple months for us to get back to 100, up 7% on the day, but it is nice to see Palantir right here at 100.82, up 7.27%. Robinhood did not get that $45 close, but we got 44.66, which is not too bad either. At the top, we were at 47 during the day, closing at 44. AMD right here, 90.39. NVIDIA, 102.71, 3.86%. We got to 104 at one point. Couldn't hold on to it too much, but we are now at 102.71. And I think that's at least better than the almost $90 range that we were at just a couple days ago. All right, on the deck for earnings, we've got Lam Research, Texas Instruments, ServiceNow, Chipotle, Discover, and IBM. We got Texas Instruments, that's green. That's up about 8% after hours. There you go. TXN, that is green. So you got that one up 8%. Let me see if I can get the numbers right here. That one seems like it's probably out if it's pumping. 8%, not bad. Oh, there's a big beat. This is a big beat. All right, here we go. 16% EPS beat. Wow. 128 versus 110. Again, EPS beat of 16%. Revenue beat 4.06 versus 3.91 billion. That's a beat by 4%. Revenue's up 11% year over year. EPS is up 7% year over year. Not a bad earnings for Texas Instruments. Stock right here is up 6% after hours. $138 billion company in the semiconductor space. That one is green. IBM, no numbers. Chipotle, no numbers. ServiceNow down a little bit after hours. Nothing too crazy. We're not seeing any real reaction yet. The rest of these stocks up just slightly. Texas Instrument, the main one, up about 5%. Lam Research is up 0.76%. Let me know in the chat if you own any of these names. These aren't like the most popular names in the market, but I do think some people have owned Texas Instrument for a long time. IBM, Steve loves this stock. He thinks it's actually going to be a winner when it comes to quantum. DFS, which is Discover Financial, that'll be important to see if the financials are in a good shape. We saw BlackRock, JP Morgan, Goldman Sachs, Morgan Stanley, Wells Fargo, and Bank of America last week. All of them crushed earnings, so I expect DFS to not be too bad. ServiceNow is actually very important for Palantir. ServiceNow is always the first SaaS company to report on earnings. They were up 6% on the day. They're the first to report for the SaaS sector. And usually if they have a good quarter, that means companies are still spending tons of money on software, which obviously is important for a company like Palantir. So that's the one that I'm looking at today after the bell, because that one's going to be very important. As you can see right there, Texas Instruments, again, beats on EPS by 16%, beats on revenue by about 4%. Okay, we got a pump on ServiceNow. I think that's a nice looking candle right there. Let me see if the numbers are out on ServiceNow. Again, Google tomorrow. That's going to be a very important one. ServiceNow is not out yet. All right, so we're still waiting for ServiceNow. We're going to see if we can get some of these other stocks in just a bit. So Jason cannot make technical today. Jason's actually taking the rest of the week off. So I asked him if he could make it today, but he's taking the rest of the week off. I think he's got some personal stuff this week. So we'll be back next Tuesday with Jason, but yeah, he's not going to be streaming for the entirety of the rest of the week. But I mean, the main plays, if you follow him on Twitter, he's running the iron condors, and they're working out very well, given he has a wide range and the market's not going super up, not going super down. So those iron condors for him have been printed and been doing pretty well. Okay, Texas Instruments. Let me see if I can get the coverage right there on that one, and then we will keep going to the next set of numbers that we have.
Revenue guidance of 4.9 in person. Hi. Well, this is a beat on the top and bottom line, $1.28, stronger than what the street anticipated for EPS on revenues of $4.07 billion. The company saying all our markets grew sequentially with the exception of a seasonal decline in personal electronics, specifically for analog revenue. That also came in higher. That's their bread and butter, $3.2 billion. And Q2 EPS guidance, stronger, a range of $1.21 to $1.47 on Q2 revenue guidance of $4.17 billion, which is higher than the street anticipated, and that's contributing to the stock pop right now of 5%. Guys?
Okay. Christina, thank you. Mike Santoli, want to bring you into
All right, we have no other numbers yet. So that was Texas Instruments. Pretty good. I don't think anyone can be upset at those numbers. We don't have the rest of them yet. Probably coming in the next 30 to 45 seconds as we get most of these numbers at 405 to 410. So we'll see. Is Lam Research bumping? Are we getting a move there? That's another big semi. Oh, we're up 5%. There you go. Lam Research. Here you go. Lam Research. This one, tastes really good with a little bit of hot sauce, a little bit of white sauce. I mean, you get to do a lot of research on lambs with that one. 5% up on the day, 4% up after hours, up almost 9% throughout the day right here. It hits 71.42, 69.45 right now after hours. Let me see if I can get those numbers for Lam Research. Okay, we got it. EPS beat by 4%, 104 versus $1 on EPS. Not bad. 4.72 billion versus 4.64 billion expected. That's a beat by 2%. EPS is up 33% year over year. Wow, that's some pretty damn good earnings growth. Again, the S&P is projected to do about 9%. Lam Research doing more than triple what the S&P's earnings is projected to do year over year. And then revenue up 25% year over year. Dude, that's a growth stock. 25% year over year growth. That's a growth stock. That's not a crappy hardware semiconductor company that's not being able to get any momentum. I don't know too much about Lam Research's margins. I think that's always been one of the issues with the company. But overall growth, pretty damn incredible. IBM is up a little bit after hours. We don't have their numbers yet. Lam Research right here up 4.5%, and then Texas Instruments up 5%. This is really bullish for Micron, AMD, NVIDIA. These are two very important multi-$100 billion semi companies. So being able to have decent earnings, Lam Research a little bit under 100 billion, 85, but being able to get good numbers from them should signal a strong level of demand. I mean, we already saw TSM like increased guidance by 3 billion. So we know that if you use TSM as a proxy for NVIDIA, that one has been doing very well. And now it's just a question if the other semis can keep up with it. We have Las Vegas Sands. Let's get those earnings, and then we'll see if we can get IBM.
those numbers, Contessa.
Yeah, Morgan, Sands reports now revenues of $2.86 billion for the quarter. That was a slight miss. The street was expecting $2.91 billion. Earnings beat 59 cents per share adjusted against the 58-cent expectation. And the board of directors increased buybacks this quarter to $2 billion. The company repurchased $450 million in the quarter. Macau EBITDA, though, here is a miss. It comes in at 5.
Up, IBM's green. IBM is greeny green. Let me know in the chat if you own IBM. That's up 4.5% right here. Okay, let's see what IBM put out. Oh, not bad. 160 versus 143 on EPS. That's a beat by 12%. Again, whether you own these stocks or not, you want to see companies beating their earnings projections to be able to say we're in a healthy earnings environment. And it seems like that's happening. And then on revenue, 14.5 versus 14.39, that's a beat by about 1%. Now, EPS is down 5% year over year. Revenue is up 1% year over year. This is not really a growth stock, either on the bottom line or the top line. But expectations were a bit lower. They beat expectations. And there you go. You got a 5.5% pump right now on IBM. This stock, I believe, is up 30% year over year, 34% year over year. Year to date, it's up 11%. Now call it 17% based on the after hours move. So this one has been a winner, and it's been a sort of source of safety as well this year, as big tech has been getting hit. Wow, Donovan's got IBM as 10% of your portfolio. Not bad. All right, some of you guys owning IBM right here. This one 4%. Again, this is a stock that Steve's been liking for a long time. 5.04% on IBM. So we're waiting for Chipotle. We're waiting for ServiceNow. That's a big one for Palantir in the overall SaaS space. And then we're waiting for Discover Financial Services. We had Las Vegas Sands come out as well. LVS, this stock is up 2% after hours. Looks like their EBITDA guidance was low, but they did beat on the top and the bottom line. That went up about 1.25%. Currently right now, after hours. Is IBM at all-time highs? Let's see. IBM is, yeah, all-time highs, basically. I mean, it was at 261 in March, so it's at 250. It's not literally at all-time highs, but it is getting there. 257 right now, after hours, up 4.8%. Someone brought 50K of Enphase today. Dude, Enphase, I didn't get a chance to really look at it, but this one, yeah, it fell 15%. Does anyone know why Enphase fell 15% today? I know the earnings yesterday. Oh, it had to be earnings, right? Yeah, the earnings weren't good yesterday, but it's not like they were disgusting. They were bad earnings, but I mean, they weren't. I don't know if it's dropped the stock 15% down. I mean, IBM, from some of the metrics I did look at this morning, it's trading at the cheapest multiples ever. Granted, the solar thesis is starting to not be as exciting to a lot of people, so you can give somewhat of a reason for the cheap multiple, but yeah, this one got hit today. We have Whirlpool earnings as well. Didn't know we had this one today. Let's take a look at this one, and then we'll get into some of the IBM numbers.
Well, John, it was a miss on the top and bottom lines. Whirlpool reported Q1 EPS of $1.70 a share versus estimates of $1.71, so not that big a miss. Revenues came in at $3.62 billion versus estimates of $3.67 billion. North America revenues specifically fell short at $2.42 billion versus estimates of $2.47. Now, non-GAAP operating margin also slightly slimmer at 5.9% versus estimates of 6%. Whirlpool.
Hold on, we got ServiceNow. We'll get back to that. Is ServiceNow pumping? Are we pumping on ServiceNow? Oh, we are pumping. We are pumping. 875. This thing hit 898 a second ago. 7% on Mr. ServiceNow. Let's get the ServiceNow numbers. Let's get the ServiceNow numbers. You know, I relate to ServiceNow because I don't wear a watch because the time is always now. And so the second part of ServiceNow's name I relate to. So ServiceNow right here. Look at that. EPS beat by 5%, 404 versus 383. And then revenue, they missed very slightly, 308 versus 309. Nothing crazy. Nothing crazy on revenue. Chipotle is down about 2%. That's not too crazy. Chipotle goes up and down 1 or 2% every day. It was up 3.4% right here, down 2%. We'll get Chipotle's numbers in a second, but ServiceNow, that's the story right there. Not bad. Not bad. Revenue, again, missed 308 versus 309. That's okay. 404 versus 383. That's a beat by 5% on EPS. EPS is up 18% year over year. Revenue is up 19%. EPS up 18% year over year. Revenue is up 9%. Let's look at all the SaaS players because they should be pumping on this ServiceNow momentum. Yeah, all of them after hours, except Palantir. But Palantir already had a pretty big day, so that one's taking a breather. Datadog's up, Snowflake's up, Oracle's up, Salesforce up 1.4% just because of ServiceNow. Again, ServiceNow, when they pump, it lets the market know, okay, companies are spending on SaaS. That's always the first company to report every earnings season in the SaaS space. And good numbers for them means the entire SaaS sector likely should be doing well. MongoDB is up 2%. Adobe's up 0.5%. Atlassian is up 1.4%. Twilio's down a little bit. Zscaler's up. Net is up. ServiceNow again up 7.3%. And then Adobe right here up 0.63% on the day. Very slight miss on revenue. I mean, inconsequential, 3.08 versus 3.09. The big story right here is a pretty strong beat when it comes to when it comes to EPS. Let's get Chipotle real quick, then we'll do IBM, and then we'll get ServiceNow. We'll try to get some exposure there for what we got for IBM.
EPS coming in at 29 cents adjusted. That was a penny ahead of estimates, but revenue of 2.88 billion did miss expectations. But take a look at the same store sales number because it was down 0.4%. While Wall Street was looking for growth of 1.7%. This is the third straight quarter of same-store sales misses, and it is also the first same-store sales contraction since the second quarter of 2020. Now, drilling down on that, transactions were down 2.3%. That was partially offset by an average check size that was up 1.9%. But the company said they faced several headwinds, including weather and a slowdown in consumer spending, but that they do see a strong plan to return to positive transaction comps by the second half of the year. That said, they did offer a tempered full-year same-store sales outlook of up low single-digit range compared to the prior forecast of low to mid-single-digit range. The stock down here more than 2%.
Chipotle beat EPS by 4%, 29 cents versus 28 cents. They missed revenue, 287 versus 295. So that one is a small miss on revenue, a beat on EPS. Street doesn't like it. I guess the headwinds in regards to the guidance is an issue. IBM just went red. It's kind of recovering. It was up 6%, or it was up 4%. Now it's down 1%. Not sure why that happened. It got to 260. It went right back to 243 at 1.238. A little bit of a green candle bouncing off 238. Chipotle now really getting hit, down 5%. That one is getting smacked. ServiceNow is one of the only ones really holding their gains, up 7.5% right here. IBM now down 2%. Something's happening with IBM. And then Chipotle currently down 5% right now. Let's get the IBM coverage, and then we'll go from there. You guys are saying Airbnb is crashing. They don't have earnings today. No, Airbnb is not crashing. That might have been a glitch for someone. Airbnb is not down 5%. Airbnb is up a little bit after hours. I don't know why it's up, but it's definitely not down as dramatically. I think we have a quote from the IBM CEO as well about the earnings or about the tariffs. So let's check on that real quick, and then we'll see what's going on with IBM.
Are out. That stock is heading higher, almost 6% right now in overtime. Here are the numbers. Q1 revenues beat at 14.54 billion versus a 14.4 expected. Our earnings per share also beat at $1.60 a share adjusted versus $1.40 expected. Software revenue was right in line with expectations. Consulting revenue a hair better at 5.07 billion versus 5.05. Non-GAAP gross margins were at 56.6% versus expectations of about a point lower. On the guide, they are maintaining their overall guidance and expectations of constant currency revenue growth of at least 5% for the year. And I did have a chance to catch up with IBM CEO Arvind Krishna about these results. Here's some of what he told me. Back to that margin beat, he told me the gross margin beat was across the board. Infra, that's referring to infrastructure, actually year to year down. All our gross margins are up almost 2 points year to year, 3 points from consulting and almost 2 points from software. Talked about the HashiCorp acquisition, which closed during the quarter. They got about a month's worth of those results in there. He said that was a very strong player, but that was the only large inorganic piece, so to speak. People want to deploy infrastructure in a common way across clouds and on-premise, and that's what HashiCorp allows them to do. Security is becoming a bigger piece. Parts of HashiCorp's portfolio go into data, and that's why data is gaining quite a bit. Now, we talked about tariffs. Two pieces I want to bring to you here. First, he talked about the direct impact on IBM. He said, while nobody is immune, we think we've managed that quite a bit with how we have optimized the supply chain, both with what we sell in the U.S. as well as what we sell outside the U.S. Now, talking about this idea of America and how that might affect companies. Here's what he said. He said, I asked him specifically about that. He said, now the place you went to is my paranoia and worry. First, as in America first, is different. I think every nation should worry about themselves first, but as long as you're part of an integrated global trading system, that's good. If this perception goes up that American companies will only do things good for America, the country, that will cause a problem. Now, I began by saying we haven't seen it in the data. Our Japanese clients look at us as being good for them. Our UK clients look at us as being good for them. Our Indian clients look at us as being good for them. So far, it has not yet penetrated into this side.
All right, so IBM saying, hey, tariffs are not an issue yet for us. We got a Trump headline after hours, folks. Looks like, by the way, Chipotle down about 5%, IBM down 2.3. Looks like looks like Trump is exempting car makers from some U.S. tariffs. That's bullish. He's probably going to talk about that today at 5 p.m. when he does his executive orders. We had a rumor of that yesterday, that he was going to be reducing the burden for some car makers. I mean, you probably had Stellantis and Ford and GM go up to him and say, hey, like, there's no way we can pay this. ServiceNow still pumping up 8%. And is the S&P moving on that news? The S&P is moving on that news. There you go, up 1/3% after hours, probably from that car maker headline on tariffs. It seems like that's the reason. Again, in about 30 minutes when Trump goes live, we'll get some more clarity on everything going on with China, the tariffs, if we're getting rid of them, if we're not. Maybe he's going to make the auto announcement there, but that is some of the momentum after hours. Okay, so in terms of earnings, Texas Instrument, great earnings, up 5%. Las Vegas Sands, great earnings, bad EBITDA guidance. They're basically flat. ServiceNow up 8.7%. We're going to talk more about that. Lam Research, good earnings. They're up 4%. Chipotle down 4.9%. Earnings missed on revenue, slight beat on EPS, bad guidance. Discover Financial don't have their earnings yet. And then IBM, I thought it was a decent earnings. I guess, and we pumped like 4%. For some reason, now it's down 2.5. So maybe something the street is discovering, either in the guidance or something else, is scaring them here right now. Okay, ServiceNow up 8.9. Why is ServiceNow pumping? Let's try to get a little bit more coverage right here on ServiceNow and see what's happening with them.
Earnings per share beat at $4.04 adjusted versus $3.83 expected. Within that, subscription revenue was at $3.01 billion versus $3 even expected. Q1 non-GAAP gross margin at 82% versus 81.7 expected. And let's see, CRPO, the remaining performance obligations, at $10.31 billion versus $10.11 billion, indicating a strong pipeline. Guidance also above expectations. Q2 subscription revenue guiding to $3.03 billion to $3.04 billion versus an expectation of $3.02. That's below the low end of the range that ServiceNow is giving here, and the full year guide a bit ahead of the street's consensus. I did have a chance to catch up with ServiceNow CEO Bill McDermott about these results. He said on the overall financial performance, this quarter was a rule of 68 between free cash flow and subscription revenue, so not too bad. Our
Palantir currently is at a rule of 81. So, I mean, look, this is good for all the SaaS companies. If they're showing that there's growth, they're showing that people are willing to spend, and that they have the margins to be able to capitalize on that growth to bring those revenues down to net income, then other SaaS companies should be following as well.
AI business quadrupled year over year. So it's really amazing. And we had 39 deals that had 3 or more Now Assist, that's AI products in them. I asked him why customers are buying AI. He says they want to improve their margin profile with the uncertainty around how much revenue they will actually have. So they are preparing for a lower revenue situation. So they're really thinking about efficiency, effectiveness, OpEx down, margin profile improved, even if there's less revenue. They're not saying there will be, but they know there could be.
That makes a lot of sense, dude. If you're a company and you think that there will be some level of volatility that takes down your ability to grow top line, the only thing you can do at that point for shareholders to be satisfied, especially if you're a public company, is to increase your margins. So if you're decreasing on the top line, you've got to increase the bottom line. Wow, S&P up 0.5% on this car maker headline from the Financial Times right here. And so if some of these software companies can help you increase your margin profile, you can bring more earnings per share, which means your multiples theoretically can go a lot higher on a PE basis if you have more net income, if you have more profit, even if you don't have more top line revenue. Where's GM and Ford? GM is up, 4% after hours. GM loves this. And then Ford, I would imagine, is up. Ford is up 2.4%. There you go. GM and Ford loving this. Tesla should love this too, right? I mean, Tesla's up 1% after hours. Tesla already makes a lot of their stuff in the United States, but still, this could be somewhat of a relief to them based on how the bill is constructed for their imported parts. Ford right here up 2.3, GM's up 4, Tesla's up 1.06. The headline is Trump to exempt car makers from some U.S. tariffs. We don't have any other details other than there will be potentially, Trump will probably talk about it today, some exemption on the U.S. tariffs. Cool. There you go. That's what we got in the context of those tariffs. Going back to Whirlpool, this is an interesting one I want to look at because they probably are more affected by tariffs given a lot of their parts are made in China. So let's just get an update on them and then we'll keep going from there.
North America revenue specifically fell short at $2.42 billion versus estimates of $2.47. Now, non-GAAP operating margin also slightly slimmer at 5.9% versus estimates of 6%. Whirlpool reaffirmed all full-year projections, including EPS of $10 a share and revenues.
Wow. Look at that. Whirlpool. They are not taking away their guidance and they're not lowering it. They are reaffirming what they said last quarter. That's like, regardless of what's happening to the stock, that's just bullish in general of the idea that a company that is heavily affected by tariffs is saying that they think they're going to be able to navigate it.
Of $15.8 billion. That's important given the new tariffs, especially on China. And on that, of course, Whirlpool said it expects new tariff policies will help level the playing field and better support manufacturing. The company claims that since 2020, Asian producers have exploited tariff loopholes, resulting in significant cost disadvantages for U.S.-made products.
Holy crap. Did you guys just hear that? This is the first time, at least in the Q1 2025 earnings landscape, that a company has actually said, we like the tariffs. Whirlpool, look at this. Since 2020, Asian producers have exploited tariff loopholes, resulting in cost disadvantages for U.S. products. I mean, dude, that's like, I have not heard a company say we are a fan of the tariffs yet. Whirlpool's up a little bit right here after hours, up about 1%. ServiceNow is up 9.14%. So the street's really liking ServiceNow's earnings. But this is a first for Q1 earnings, a company actually saying we are happy that the tariffs are leveling the playing field.
That has had an increased impact on the company's results the last 2 quarters. And guys, you can bet they'll be talking way more about tariffs on the call.
Yeah, they're not the only ones. Diana Olick.
Well, I mean, I'm pretty impressed, dude. It's been what is it? About 25 earnings in the past 2 weeks, and we have not seen a single CEO really talk positively about the tariffs. Whirlpool, you would think they're massively affected by all the products and the parts that come from China for their business, and they're actually happy based on the fact that it's leveling the playing field. Now, there might be some, hey, we want to get on Trump's good side and we want to make sure that he likes us, yada, yada. I mean, there might be some of that, but there also might be some genuine, like, we did need some reciprocal tariffs, and it looks like they're a fan of some of these tariffs on China. ServiceNow up 8.77%. That's the winner right here after the bell. Lam Research is up 4. Texas Instruments up 6. Las Vegas Sands up 1. Chipotle down 3. IBM, for some reason, tanking, down 4%. I don't know what the street's so upset about on this one. Discover, I don't think we have their numbers yet. And then ServiceNow right here, basically up 9% after hours. The 10-year is going up. Let's take a look at the 10-year. It was creeping up towards the close. Oh, we're green on that. Yep. 4.391. Very close to that 4.4 again, which is not good. I mean, look, if stocks go up, that's okay. But if we start to see stocks fall off, then that's not the best either. But in general, I mean, like, we can't have that high of a 10-year. It's just not going to be the best for refinancing that debt, which is going to be due in the next 6 months. And we got to refinance it at some rate. IBM right here down about 4.2. Chipotle again down 3. Discover, no earnings yet. ServiceNow still up 8.7%. Whirlpool's now up 4%. It was up 1% like 5 minutes ago. No, it's not. I mean, maybe let me see on another platform. Ticker symbol pool, POOL. Are we up after hours? No, it's flat after hours. That's not up. It was up during the day, but it's not. Wrong ticker. Wait, what's the right ticker? Hold on. Oh, WHR. Oopsie. Thought it was pool. Never mind. Whirlpool's up 5%. There you go. Dude, this is only a $4 billion company. I thought Whirlpool was like a $30 billion company. Like, Whirlpool products are universal, bro. I'm sure everyone has like seen or used a Whirlpool product. I feel like those products are part of a lot of people's daily lives. Whirlpool, look at that, 4%. There you go, after hours. They're getting a little bit of momentum here right now. Some of you guys are saying they do a lot of manufacturing in the Midwest. Yeah, that's true. And so that's probably another reason why they're happy with the tariffs, because it's going to level the playing field for Asian manufacturers. I do think, I mean, I'm not an expert on this, but I'm assuming some of the parts that they get to build the washing machines and the dryers and the fridges and all that stuff comes from China. So the fact that they're not manufacturing in China entirely could be a reason why they're happy that we have these tariffs, because they're not that dependent on the cost of labor to build everything that they're building. Yeah, I didn't know what the Hoover brand was, but I knew about Whirlpool. I didn't know about Hoover, but I knew about Whirlpool. So that one I did know about. We have another company. Do any of you guys know this one? Knight Swift. Do any of you guys know this stock? Knight Swift. Apparently they're having earnings. I've never heard of this one, but here's Knight Swift earnings. Again, Trump will be live in about 30 minutes, and we'll see what he says about tariffs as well.
Now they're down more than 3%, following the company missing on revenue but beating on EPS. EPS 2 cents above the estimates of 26 cents a share. However, the company also lowered its current quarter guidance. The prior guidance was 46 cents to 50 cents a share. Now it's at 30 to 38 cents a share. In the release, the CEO, Adam Miller, really talked about a lot of the tariff-related uncertainty facing the company. He said that there was a tariff drag on March activity that dampened the typical season build and freight volumes. Also said that customers are grappling with fluid trade policy that's causing some to delay decisions, while others are managing inventories more tightly out of an abundance of caution. And then goes on to say other customers are taking action to mitigate their tariff exposure, while others are taking a wait-and-see approach. Just basically describing a lot of the uncertainty created by the trade policy. He also said that Knight Swift is taking the same actions that a lot of other logistics companies are doing, trying to reduce costs and basically tighten up their operations. Some people call it right-sizing. So again, shares of Knight Swift, you can see actually they're back to flat right now. They did fall just a short time ago after a miss on revenue, but a beat on EPS, also lowering its current quarter guidance. Prior guidance, 46 to 50 cents a share, now 30 to 38 cents a share.
Okay, this is a trucking company, apparently. I did not know what this company was. Knight Swift, they're down 25% year to date. Looks like earnings was a beat in some metrics, but a miss on guidance, which is fair. Seems like they cited tariffs as potentially the reason, down about 4% after hours. Year over year, it's down 20%. They went public back in 1994. I feel like I should know this company, but I did not know about it. Knight Swift Transportation Trucking Company. This one up 1% of the day, down about 4% now after hours. What was the other trucking company that got hit the other day? I'm forgetting the name of it, but we saw their earnings, and they also cited tariffs as a bit of an issue. Rocket Lab right here up 2.5% after hours. I don't know why Rocket Lab is up after hours. Tesla's up 1%. The main headline we have right now is that Trump potentially is getting rid of some of the auto tariffs, and that's pumping not only the GMs, Fords, and Teslas of the world, but also the broader S&P 500 up 0.5%. Rocket Lab, I don't know why they're up 2.3. Did they get another contract? Did they get another deal? Oh, JB Hunt. Yes, JB Hunt. JB Hunt. That was the other trucking company. Trump also to exempt steel and aluminum from tariffs. Whoa. That's another headline. There you go. Again, not confirmed yet, but he is going live today, so he might be talking about it. Financial Times reporting steel and aluminum. Those were the 12% tariffs that we put on. That was like March 12th. So that those have been in place for a while. If we're taking out steel and aluminum, yeah, that could definitely be big for the commodities market as well. Okay, here's the Rocket Lab headline. Rocket Lab announces selection by Kratos to launch a full-scale hypersonic test flight for the U.S. Department of Defense. Well, that's good. That's good. Rocket Lab's been getting some good headlines this week, dude. Yeah, there you go. Rocket Lab just launched a major win. It's been tapped by Kratos, ticker symbol KTOS, to launch a full-scale hypersonic test flight for the DoD under the $1.4 billion MACH TB2 program. Launch is set for no earlier than Q1 2026. There you go. Shout out to Rocket Lab. Up 3.3% after hours. It was up 6.5% during the day. Rocket Lab right here. 2 big contracts this week. One was the $46 billion contract. They're not going to get all of that, but they're going to get some of that. And then today we're getting a new contract with Kratos after the bell. All right, not bad. Not bad. Shout out to Sir Peter Beck, baby. He is a founder. He's worked his whole life to build this company, and they're starting to get some real deals to show the benefits from that. Kratos stock, let's see, after hours, they're up a little bit. They're up about 1%. They were up 3% during the day. Rocket Lab actually has a bigger market cap than Kratos. Rocket Lab at $9 billion, Kratos at $5.5 billion. S&P 500 right here, still up 0.5% after hours. In terms of earnings, ServiceNow still up 9%, Lam Research up 5%, Texas Instruments up 5.3%, Las Vegas flat, Whirlpool is up 5%, Chipotle down 4%, IBM now down 5%. IBM really tanking. Discover's up 1.2%. Let me see if I can get the numbers for Discover. I expect those to be decent given all the financials have been decent this year. Discover, no, still not out. We do have O'Reilly Auto Parts. We don't have Discover, but we have O'Reilly Auto Parts. That's a big one for tariffs, right? O'Reilly Auto Parts. That one is down 2.64%. They missed EPS by 5%, 935 versus 987 expected. And they missed revenue by 1%, 4.13 versus 4.17 expected. Why is IBM tanking? I have no idea. Honestly. I mean, it wasn't an amazing earnings, but it also wasn't a horrible earnings. So I'm trying to figure out if there's any specific headlines that are catching that, maybe guidance there. But I'm not sure why IBM's tanking. O'Reilly Auto Parts, that one's down 2.5%. Let's see if we can get any coverage on that one. That is definitely a more tariff-sensitive name. Let's see. Okay, before I get that, we got a news update on those auto tariffs. Let's take a look at that real quick. And then I'll see if I can find some O'Reilly coverage on this one.
And the automakers, our Eamon Javers, has details from the White House. Eamon?
John, that's right. The Financial Times just reported a few moments ago that the White House is working on an effort to exempt automakers from certain Trump tariffs. Now, I just spoke with a White House official on this who confirms that that is under consideration here at the White House. The idea here is that automakers are subjected to a whole series of overlapping tariffs under the current scheme, including the fentanyl tariffs, possibly aluminum and steel tariffs, all the sectoral tariffs, all of those kind of overlapping and stacking up on one another. And the idea is under consideration here is looking at a way for automakers to help destack some of those tariffs so they don't all multiply on each other and the number ultimately comes down to a more reasonable figure. What we don't know is exactly what that reasonable figure might be or what that destacking effort might look like, but the FT is calling this a trade war climb down by the administration, and an official here now confirming that it is at least under consideration for now. Not a done deal just yet, but we'll wait for official details.
So to put just a fine point on it, it's not that tariffs are necessarily going away for automakers, but that you may see a paring back given how many different tariffs potentially face them right now.
Right. You have all these tariffs going in all these different directions here from the White House, focused on fentanyl, focused on specific imports. The idea is that the automakers are getting hit by all of these. And is there a way to sort of destack those in their terms to show that some reasonable level of tariffs will remain in place, but the sort of super high number that those all add up to is not the number that the automakers are ultimately subjected to.
Okay. Eamon Javers, thank you.
All right, Trump's going to be live in about, they said 5 p.m., but it might end up being 5:15, 5:30. It might not be exactly at 5 p.m. He is signing some executive orders. I don't know what he's going to be signing today. But he's going to be signing some new orders, taking questions, and he'll probably clarify some of the stuff for tariffs. In terms of IBM, guys, I can't find a reason why IBM's getting hit after hours. Their guidance, by the way, is not horrible. So they said right here, there continues to be strong demand for generative AI, and our book of business stands at more than 6 billion inception to date, up more than 1 billion in the quarter. ServiceNow, Bill McDermott said their AI business is growing 400% year over year. I mean, it's just really hard to be bearish AI when IBM, which isn't really a growth stock anymore, is doing 6 billion in backlogs for the AI business, and then ServiceNow is growing 4x year over year when it comes to AI. So not sure why that one's getting hit. O'Reilly Automotive, that one missed on the top and the bottom, so that one's down 2.21%. The real winner right now really is ServiceNow, up 8.85% after the bell. Robinhood's also moving after hours. I think Robinhood's moving because the market's moving. Robinhood's up 1.4%. I don't think there's any Robinhood headlines, but if we're walking back steel, aluminum tariffs, which were on Canada and Mexico, by the way. So that's like helping out some of our friends, taking away those tariffs. That would be super bullish. And then if we're getting rid of the auto tariffs to an extent, yeah, you would imagine market gets a little bit of a pump, right? Definitely wouldn't be the worst thing. Thank you for the $10 super chat. Thoughts on CEP? I don't know this company. It is a small cap, Cantor Equity Partners, $211 million market cap. I've never heard of it. Sounds like a private equity firm or something, but I will take a look at it. It was up 55% on the day, so I'm assuming there was some headline that got this to move. Now, granted, there's only 12 million shares outstanding, so that's probably what really got it moving, potentially some type of a squeeze. But I'll take a look and see if there's anything there. CEP is up about 55% on the day. Rocket Lab's still up 2.6% currently right now after hours. And thank you for the $10 super chat. I don't own enough Rocket Lab. Shout out to you, Mid. Started watching in December. Now I wake up and close the markets with you daily. Keep up the good work. I bought Hood because of you as well. Ed, thank you for being here. Appreciate everyone who opens and closes their day with me. Truly, if I don't say it enough, it really means the world, and eternally grateful. I mean, we had 1,000 of you with me and Steve last night till like almost 12 a.m. just talking about stocks. So I think all of us are just so obsessed, and we need this stuff. Like, we're literally addicted to this market stuff. So it's nice to just have a community, and I think the meetup on Saturday is going to be really fun because we're going to have a lot of people who once again get to meet in person and discuss everything when it comes to investing. ServiceNow up 8.7%, Robinhood up 1.2%, and again, S&P 500 up about 0.5% after hours right now. Really liking some of these Trump headlines with tariffs. Shout out to Tess as well in the UK. It was 3 a.m. here. Always appreciate her staying up. She probably fell asleep to Steve and I arguing about something. By the way, at the end of the market open, I forgot to show you guys. This is the picture Steve sent me. Me and Chris are talking about tariffs and Trump and negotiating and blah, 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 blah. Steve's like, hey, I got some chocolate. I'll tell you, bro, this guy is the most unserious, serious person you will ever meet. He could care less about what's happening in the day. Markets pumping, best day of 2025 at the time, at around 11 a.m. He's like, hey, do you want to see the chocolate I got? Like, he is a treasure. He is absolutely a treasure. When United Kingdom? Most likely in June. Most likely in June. Or maybe like end of June. I think the Robinhood event is happening in France. And so my plan was I'll come a week early, do the UK, and then I'll go to France, and it'll be a UK and France trip. So that is still the goal. And that's the idea. So hopefully that happens in June, and it would be very exciting to see that play out. Did we get Southwest earnings today? Did we get South? Oh, wow. We had South, but no one, I didn't know we had Southwest. All right, let's look at Southwest. Here we go. This is an airline. Let's see what they had to say about tariffs as well.
To bring you Southwest results are out, and Leslie Josephs has the number for us.
Hi, so these just came out from Southwest Airlines, beat on the top and the bottom line, 13 cents a share adjusted. That's better than the 18 cents that analysts were expecting as a loss for Southwest. 3.43 billion for revenue. That's better than the 6.43 billion in revenue, better than the 6.4 billion in revenue that analysts were expecting. Of course, a lot of initiatives going on at Southwest Airlines now. The airline is completely changing itself, going to start charging for bags next month. It's going to have seat assignments, and we're going to hear on the call tomorrow how those initiatives are paying off. What we also heard from Southwest Airlines is that they are going to make some capacity adjustments in the back half of the year. There has been some softness, especially in domestic air travel. We've heard it from Delta, we've heard it from United, and those airlines are making similar adjustments as well.
Bro, Southwest is down 5%. United was up 5%. This feels like a Southwest issue versus an airlines issue. Yeah, United had a great earnings. They reaffirmed guidance, and they said, if we have a recession, it'll be bad. If we don't have a recession, we'll be okay. You would think Southwest would say something similar. They got the playbook from United. All you have to do is kind of give two versions of guidance. It looks like they are taking a bit of a different approach. Let me check their top and bottom line again. It looks like they beat on the top. I did not know they had earnings today. Southwest. That's an important one for airlines. Revenue $6.4 billion. That's up 1.6% year over year. Wow, they lost money. Southwest is not profitable. I thought these guys were profitable. They lost $149 million. I think that's a little bit better than expected, but still, now they are close to profitability, but they're not growing. 1.6% year over year is not growth. And then they're not profitable either. Robinhood right here, up about 1% after hours. So let me see if the airlines are tanking. United is actually up after hours. American Airlines is up after hours. Delta is up after hours. JetBlue, if JetBlue is up and Southwest is down, that'll say something. JetBlue is up after hours. This is a Southwest issue. This is not an airlines issue. The airlines usually move together. So the fact that they're not moving the way that they're moving, or they're moving in the same fashion as Southwest, is telling around Southwest. I'm using Porters to go to Toronto this weekend. So I've never heard of Porters before, but apparently that's like the big Canada one. So I was going to use United, but they just didn't have the right timings. And Porters has like 20 different flights every other hour going into Toronto from Toronto to New York. So that's the one I'll be using. Southwest right here, down about 3.2% currently after hours on earnings. ServiceNow still the big winner of the day, 9% on ServiceNow. ServiceNow year to date, I think this one is still negative year to date. Yeah, this one's still down 22%. Now with the 9%, they're down about 11%. But this one still is recovering a lot of what it lost versus necessarily making new all-time highs, which is not the worst thing in the world for ServiceNow. Google is not down 6%. Okay, so when you guys see Google's down 6% or NVIDIA's down 5%, you got to refresh whatever app you're using. Usually, if it's Google Finance, ironically, it always glitches. I don't know why, but it always glitches. And then Yahoo Finance has a lot of glitches as well. Webull and Robinhood actually tend to have very few glitches when it comes to after hours. Dude, Google Finance is such an undervalued opportunity. By the way, speaking of Google, have you seen this new Google AI mode thing? Like you type in a search. So I just typed in Palantir, right? This is my Google. I typed in Palantir. You see how it says all news, images, videos, et cetera, et cetera. Now there's this thing called AI mode. You click AI mode. And then it's like Grok. It's an LLM, obviously. But it's like, I mean, I was using it yesterday and it's pretty cool. I mean, I don't know why people would use this over ChatGPT unless they're just like using Google first. But for all the people that don't even know what ChatGPT is or Gemini or Grok or whatever, if you're on Google, all you have to do is press AI mode and then boom, you get a bunch of content in LLM format. It's decent. It's not like it's in no way beating ChatGPT, in my opinion, in terms of like the quality of content it gives. Granted, I haven't played with it too much. But I was using it yesterday to look up some spots in Toronto, and it was relatively, it was almost like a Google search, but it took out all the fluff, took out all the blue links, and just gave me the content. But it didn't give me so much content where I was overwhelmed like a traditional LLM. So I thought it wasn't horrible here. But that's what we got from Gemini. Need agents ASAP. That is 1000%. Agents are going to rule the world. They are going to rule the world. They're going to be everywhere. And we will have plenty of our own personal agents. In terms of the Toronto meetup, again, this is probably the last day to sign up on the forum. It is happening Saturday. You will get the location if you sign up with your email, and you will get an email from me later today. Everyone else who already signed up got the email. So if you're interested at all, it'll be downtown Toronto. And yeah, it'll be a nice location. It'll be a bunch of people, and we'll be talking stocks and investing and whatever else people want to speak about. Okay, Tanner, you didn't get an email because I'm going to personally text you. Tanner will be there as well. So if you've been waiting to see Tanner in person, then this is your opportunity to get to see Tanner as well. So he will be there on Saturday. Trump is not live. He's going to be live in about 15 minutes, but I doubt it's actually going to be live at 15 minutes. It's probably going to be 5:15-ish to 5:20. They usually take a while to go live. So it's going to take a bit to get there. Tesla's up a little bit after hours. Yes, Lamb Research is up after hours. Are you flying coach? I am absolutely flying coach. There is no way I would be flying first class to Toronto. It's like less than a 2-hour flight. I said this on the channel like 2.5 years ago, and I changed my mind, but I still don't know if I'm actually going to follow through with this. But I said I would never fly first class, no matter how much money I make in my life ever, because I just felt that there's something sort of spiritual about flying it in 54F and being humbled by the fact that, you can't just enjoy everything in life just because you have money. Like, you need to keep yourself grounded. And then when I was coming back from India and I see this little 3-year-old in a first class flight for the next 15 hours, having all this leg space, and this dude barely even has legs, I'm like, you know what? I'm tired of this humble shit. I don't care. If I got the money, I'm going to freaking spend on a first class flight. But then I think about it and I'm like, would I really spend thousands of dollars to just be on an airplane? Like, it's like to actually pull the trigger and do it. It's hard, bro. It's hard. Like, I feel like I've got to have FU money. You have FU money, then it's like, all right, whatever. I'm not at FU money yet. I mean, like, it's like, $300-400 on a plane ticket. Like, yeah, I can afford it. Yeah, I can write it off for my business, but it's $300-400. So, you don't want to spend $1,500 just on a flight or something. So, yeah, I'd rather fly 54F. Business class is good enough. That is fair. I mean, he does have legs, but the dude is 3 years old, right? Like, he has all this leg space, and he's just sitting there. You know what I'm saying? Like, dude, when I went to India when I was younger, I sat in the middle seat with my mom and my sister. It was uncomfortable, but it taught me humility. I didn't get first class at freaking 3 years old, bro. Come on, bro. I don't care how rich I get. My kids are, dude, if I get super, super rich one day, my kids are going to be treated like we don't have a single dime, bro. Like, they are not flying first class anywhere. Like, forget that, bro. They need to struggle. They need to learn what it's like to be miserable and feel the pain of having to actually not just, get a gourmet dish served to you in first class. You got to deal with getting some peanuts and some juice in the middle seat in economy. So got to raise them with some humility. United Airlines right here, up a little bit after hours. So crazy that Southwest is actually down on this, dude. Did not expect Southwest to go counter to all the airlines, but they are. Look at service now. It's trying to go for new intraday highs right here. 898 after hours, 9.91%. 9.91%. Under 3-year-old is free. He got a free first class ticket. I didn't know that. I thought you have to pay it regardless. I didn't know it could be free. I know like a baby's free, but 3-year-old's not a baby. Like, it's still a little kid. Under 2 is free, right? There's no way a 3-year-old has a free flight. I feel like a baby is free. Even if because a baby's probably just like sitting on you during the whole flight. Look, regardless, I don't know. I feel like if I do get super rich, kids got to be growing up with more humility. Here's an analyst on Tesla. We got Trump live in about 10 minutes. This is an analyst from the retail Tesla community, so I wanted to play this clip. This is Alexandra Boomer Mama. Some of you guys may know her, some of you guys may not, but she was on Bloomberg, and here's what she had to say about Tesla and brand damage.
It's always been clear, both by Elon and by President Trump, that this would be limited in time for his full time allocation of time. But this is coming to an end in May, which is not surprising at all, other than people who may not have listened. So him dialing it down to 1 to 2 days a week. And do remember, Elon's week is a 7-day week and not a 5-day week. So him dialing it down to 1 to 2 days of Dodge oversight and still being available to it doesn't mean he's completely backing out of it. we're happy as Tesla shareholders that he's going to put more time into Tesla, but frankly, nothing has been delayed or missing the 4 or 5 months that he has now been with Dodge. The launch of the new Model Y simultaneously in 4 factories on 3 continents shows how strong the Tesla team is, whether Elon is in Washington, D.C. or somewhere else in the world. So there is really, there was no concern whatsoever. And people being surprised by the stock going back up, as Greg said, I think they have not watched what Tesla is actually going to accomplish.
You guys agree? Do we agree? This is one of the core people in the retail community, from my understanding. She's been having a little bit of public beef with our boy Dan Ives over the past couple of days. And she says, yeah, there was never an issue with Doge. There's not going to be an issue with Doge. And now that he's leaving Doge, it doesn't really matter. ServiceNow right here, still up 9.9% after hours. And then you got Tessie up about 1%. After hours. Oh, Jeremy, so let's talk about that. I said I would talk about it, so let's do that. When Trump goes live, I will switch to him, but he's not live yet. It might be a little bit later than 5 o'clock because there's always a delay, but I'll switch as soon as he goes live. Okay, so Jeremy, popular YouTuber. He is a friend of mine. I have spoken to him before. I have seen him in person, and he has been a big Tesla shareholder for 2016. His average price is $13, so he's been there for a while. He posted today that he is out of Tesla in his public and his public Patreon. He still might own some in his private account, but I think this was his main one. He started selling last year. He had 777 shares left. He was up 1,800% on the position, and he sold today. He says, I sold 100% of my Tesla stock right now. I will cover why I did it on the main channel later. There's a long list of reasons. Goodbye, Tesla, my Tesla. So here's my question. Was it a good sell or not? What do you guys think? $13 selling at $253. You can't be mad about that type of a return. I don't think anyone would be upset over 1,800%. Would I have done it? Look, I mean, I didn't buy Tesla at $13, so maybe Jeremy understands Tesla way better than I do, given he's been in the stock for a longer time. I was impressed that the stock held up with those crappy earnings, and I would actually be more encouraged not to buy it, but to say, I'll hold on for the. I mean, is it really going back to 13? No. Is it going back to 150? I mean, maybe, but it feels kind of unlikely if we're past the worst of the tariff volatility. Like a lot of these stocks, I think, have bottomed if we're past the worst of the volatility. Not saying they have to keep going up, not saying they can't go down 10, 20%, but I don't know if they get back to their true bottoms that we saw early in March. So just for the potential of FSD and robotics, I personally, if I had a $13 average, I think I would have just held on for the ride. Unless he has a better spot to put this 200 grand, which maybe he does. He's selling to buy AMD. Okay, I don't think he's confirmed that yet, right? He'll probably talk about it later today. I mean, selling Tesla to buy AMD, I don't know. Granted, I have like zero conviction in AMD. I could understand if he said NVIDIA. Steve and I talked for a long time last night about NVIDIA, and we came to the conclusion this thing really is ridiculously undervalued. But I don't know. I wouldn't have sold. Granted, I didn't buy it at $13 either, so there's obviously a difference here. Some of you guys are saying yes. Some of you guys are saying no. Some of you guys saying it's too much of a tax event. It's definitely long-term capital gains, not short-term. So it's not going to be as bad as if he bought it within the past year. He is bullish on cheesecake and bearish on Tesla. I don't think it's fair to just be like you hate one stock and don't like the other, right? There might be a unique thesis for why you're bullish on Cheesecake Factory, right? And Cheesecake right here, 51.30, that's up 1.7%. And so I don't think he's doing like a spread trade of like short Tesla, long Cheesecake. I think he might just be thinking, hey, right now Tesla is not the best play, and maybe there's some more momentum in Cheesecake. And look, to his credit, I mean, Tesla, those were really bad earnings. It is absolutely trading on hype and momentum. That's okay. We have stocks that in the market just trade off hype and momentum. My issue here is that if it was like a $200 average or something, I'd get it. It's a $13 average that I just don't think it's going to be easy to get that back. So you've got to really justify a unique opportunity cost to be able to take the gains here, right? And whether it's AMD or not, he's got to have some other opportunity that he likes more than Tessie. He picked Celsius in December. I mean, yeah, Celsius has been a winner since December. I think this thing was at like 18, 20 bucks back then. Celsius right here at 37. Ironically, it was one of the only growth stocks that was down on the day. It's up every day when the market's red. It's red when everything's green. That's what we got with Celsius. Okay, I think the Trump thing is starting right now. Give it a second. Let's see. No, okay, so the stream is live, but he's not live. Stream is live, but he's not live. If they actually start on time, I'd be impressed. I don't think they're going to start literally at 5 p.m. But the stream is live. Amit, why do you think NVIDIA is ridiculous cheap? Are you bullish NVIDIA post 2 years? Do you think CapEx won't slow down? No, I think CapEx won't slow down, dude. I mean, we talked about it a lot last night, but first of all, Google reaffirmed their $75 billion CapEx spend last week. I forgot Sundar issued a tweet, a statement saying, hey, we continue to spend on CapEx. Amazon they didn't literally reaffirm, but they pretty much said we have no plans to change our CapEx guide. Meta, I believe, is going to reaffirm in another week their $65 billion. I think this is going to get more substantial. Oh, how did we forget this headline today? This is another reason why I think NVIDIA is stupidly undervalued. OpenAI. We've been talking about them a lot for the past couple of weeks because of their user growth and the fundraising round they just did. OpenAI, it was leaked today that they told investors they are now projecting $174 billion in revenue by 2030. This number 2 weeks ago was $125 billion. They are projecting another $50 billion in earnings or in revenue in 2030. The company's worth $300 billion. To give some context, Google does $400 billion in revenue and they're worth $2 trillion. So if OpenAI thinks they can do about $200 billion in revenue, could they be worth $1 trillion? Yeah. Now, obviously, revenue is not profit, but I imagine by then they would have the financial discipline to take some of this revenue and bring it down to the bottom line. But any company that's doing almost $200 billion in revenue, I mean, they're probably going to find a way to go public, and they're probably going to get people that want to buy that stock just from the sheer growth. OpenAI right now, I think, is doing $5 billion in revenue. They want to get to $200 billion by 2030. That's some pretty aggressive growth. That's 40x growth in the next 5 years. So why is that bullish for NVIDIA? Well, a lot of the compute that they're going to be having to spend to train higher and higher models that eventually lead up to AGI. And with all the reasoning models and the newer advanced version of reasoning models in the future, they are saying their AI agents will get them $20,000 a month in revenue per agent. Like, there's a lot of training that's going to have to be done and a lot more computational infrastructure, which is really good for the data center stocks as well. That's why I think Vertiv was up 10% on the day. All of that comes back to NVIDIA. So, I mean, I think there's a lot of reasons to be bullish NVIDIA. I don't think CapEx is slowing down, even if we lose China revenue. But now, if the China tariffs are being walked back, who knows? Maybe we might start getting that China revenue back in Q2. So I think there are different elements to still be bullish on NVIDIA in and of itself. Is OpenAI growing faster than Palantir? Yes. Palantir is growing at like 30%. OpenAI is growing at like hundreds of percentage points right now. But you know, OpenAI is not profitable. And one could argue Palantir's impact on the companies that they're working with, the contextualization of the models is more important than the models themselves. Yes, the models are commoditized, but even if that's the case, if OpenAI has one of the best models, the fastest models, the most people using their models, you can still make a lot of money off of a commodity, and you can just beat the competition from being commoditized. So even if the commoditization argument is there, I think there's a lot of different use cases for OpenAI. And it's trading at $300 billion. If they're going to do $200 billion in revenue in 2030, you could argue that multiple is cheap. Trump is not live yet, guys. Trump is not live. Trust me. I have it on my second screen. I would have switched if Trump was live by now. He is not live. There's always a delay when he goes live as well. You guys got to remember that. The White House doesn't let the press go live immediately when Trump goes live. For whatever reason, that delay exists. Even the White House official stream says we will begin shortly. So, yeah, they're not live yet, but I will get there when they are live. Amit, would you sell Tesla right now at break even and put it into NVIDIA? I mean, yeah, I probably would. I just like from the multiples. I think NVIDIA is cheap. Tesla has way more potential long term. Like we had this conversation with Steve. If you want Tesla or Nvidia for the next 10 years, I would pick Tesla, because I just think there's so much potential in Optimus, and it's going to be like reoccurring revenue in the context of the robots. FSD, I use it every day. It's getting really good. I see that story. But in terms of just like cheap stocks that make you feel like you could sleep well at night with good growth, yeah, I think it's Nvidia. I really do. So I just think Nvidia is a much better bet right here. But I think long-term Tesla's going to be fine. Now, granted, today was a good day. I mean, Tesla reported on one of the best days you can imagine. It was literally one of the best days of 2025. If we had a crappy day, or we get to a crappy day, and then the market wakes up and digests the earnings that Tesla actually put up, I mean, there may be a world where the market's like, wait a second, $250 is a little expensive for the earnings that we just got. So I think we're going to have to kind of wait and see how that plays out. But whether NVIDIA, whether the market wakes up or not to NVIDIA, I think it will be undervalued regardless, because I just believe in their growth story. And they're putting up the growth. Tesla's not putting up the growth right now. It is what it is, right? It can still trade at a high multiple, but that growth is not necessarily as exciting for Tesla. Google is tomorrow. That'll be a big one. Let's get an update on Google earnings. Again, Trump is not live right now. He'll probably be live soon, given the stream is up and going. But Google is going to be an important one, and Google, Google has something to prove. They have to prove that their AI thesis is still intact, and they're not necessarily losing the AI race. Waymo, all these other different products, Apptronic, they've been well discounted from the valuation. Google's trading at the cheapest of the Mag 7 at 15 times. So I think tomorrow will definitely be an important one to see if they can put up the numbers, and if those numbers are going to be meaningful enough to get investors to continue to be excited. Remember, Google was at $210 in the beginning of the year, and then they had an okay earnings, not a horrible earnings. It was an okay earnings. And, then thing tanked all the way down to a 147. Can you set up an AMD versus NVIDIA debate? Pretty sure there's heavyweights on both sides you can get on the show. Yeah, that's not a horrible idea. I would definitely get Steve to defend NVIDIA, and then I have to find someone who could do AMD. Yeah, that would actually be, I could moderate the debate. That would actually not be a horrible idea. AMD versus NVIDIA. All right, let's get an update right here on Google, and then we'll keep going.
The sell-off and think, okay, where are the opportunities now?
Well, consistent with your last conversation, which I thought was thoughtful, there's no directionality here when you're investing at Google, in my view. And again, part of this is a story that Google sentiment is so poor and the valuation is so attractive, again, relative to growth tech. And I also think more, at least, immune from tariff dynamics than other of the larger, big mega cap tech stories. 10.5 times EV/EBITDA, a PEG ratio of a little over 1, in a world where I still think we are going to be pricing in lower equity growth, possibly a lower multiple on the S&P if we are, whether we're dancing with recession or not. I think the multiple is important. The valuation at Google makes it a lot more compelling in this environment. I would just also highlight, two big companies that the market's always seemingly focused on, in Netflix and in Tesla. Netflix had fantastic numbers. Tesla's numbers kind of as expected. But in both those releases, there's two elements of the story that I think are very Google positive. If you think about Netflix, their growth is tremendous, but they cited YouTube's really outperforming Netflix in terms of consumption growth for a streaming world that we know is part of a secular trend. YouTube is not really priced into Google's valuation. I think there's an element of this that I think is at least underappreciated. And in Tesla, we had a fascinating conversation last night with ARK Invest's futurist, who was pointing that, like many people, the value in Tesla is really around robotaxi, and that the hardware and the auto company is something that's not really where you should be looking. I at least agree with the auto part being overvalued. Waymo is something that I think is also not given any valuation credit, at least underrepresented if you think how much Tesla gets from robotaxi. So I just think the sum of the parts on Google makes it fascinating, and I think it is non-cyclical here.
Yeah, it's always interesting.
I mean, I agree. Trump is still not live yet. I will switch when he's live, but he's not live yet. But I agree. I think when you do a sum of the parts valuation, there are headwinds to Google, especially with the antitrust stuff. But I can't imagine anyone saying Google doesn't deserve a little bit of a higher multiple. And there's definitely reasons why Google has a lower multiple, but it's one of those stocks where you feel like it's not going anywhere unless they just massively lose the entire search game or the AI game. And I don't think that's the case. I think they're doing way too much in that space to completely be obliterated. But I can understand why people think search is dead and they don't want to continue holding on to that story. Speaking of ARK's Brett Winton, he was on CNBC yesterday defending the Tesla earnings. Let's get his take from here, and then we will switch over to Trump, who should be live in about 5 minutes. Oh, let me share that. Here we go.
Here right now have to work in order for those future bets to pay off?
Well, I love to hear the skepticism amongst the panel here, because nobody mentioned the most important data point, which is they reaffirmed the launch of robotaxi in June in Austin. And the way to think about this, the automotive business is important because you need to deliver units into the market, which they already have millions in play, that will become prospective robotaxis as they software update the vehicles. The entire business model of this company is going to transform as and if robotaxi launches, where you go from a one-time sale of a vehicle, as the panelists mentioned, at low margin, to generating ongoing revenue off of every vehicle in fleet over time. And it just transforms the business. So the marginally important news is, can they launch and can they scale that business successfully? We think the evidence is in play that they can, given the acceleration in AI. And we think that delivering incremental vehicles into the market, for now is good to build up that base that will become robotaxis. And in the future, that'll become the robotaxi capability will be a demand driver for their production. They're actually going to be production constrained again to a material extent, in our view, once robotaxi begins to scale across the US.
Right. So, Brett, you love to hear the skepticism. I love to hear the optimism, because as a futurist, it just seems like pie in the sky sort of stuff. I mean, I mean that sincerely, because you've been following this company. You've been invested in this company for a long time. And when have they ever hit any of the targets that you suggest? And by the way, you need to make this transition. And Mel started off asking the question. They have never had their core business so bad. It's never been this bad. And if it continues to get worse in a protracted trade war, you're just not going to have the ability to invest in robotaxi and Optimus, whatever the other crap that you guys think is going to happen at some point. So I'm just curious how you think of that, because you are the futurist.
Okay, he didn't have to say crap. That's a little disrespectful here.
I guess maybe I sound a little cynical.
Well, one, I think you're wrong that their business has never been in worse shape. If you look at their share of overall vehicle sales, they're roughly flat. Trailing 12-month vehicle sales, they're roughly flat. As they deliver a lower cost vehicle, they should be able to sell more units in, just on the kind of demand elasticity curve. And as they continue to drive down production costs, I think they'll deliver less costly vehicles to the market. And those vehicles will be utilized more. The fundamental case is, when you buy a new car, you're basically buying a bundle of miles at like 75 cents a mile. If you could have somebody drive you around for $1 a mile, that's a great deal, and everybody will take that. And so once robotaxis in the market, then they become a point-to-point transportation provider rather than just a seller of hardware assets. And it just transforms the business model and begins to spit off cash flow to fund Optimus and to continue to fund the AI data center. So we don't see any cash flow issue for the business at all in terms of their ability to fund, ongoing CapEx and R&D operations.
Brett,
All right, so that's how ARK is justifying it. ARK is saying, hey, give it some time. It'll play out. Be patient. And, Kathy and ARK gets to say this, and has consistently said this, because they've been in Tesla. They were the first institutional investors in Tesla. I don't know, literally the first, but they were the first public ones to say, hey, we believe in Tesla. Kathy had that wild do you guys remember when she put out a $4,000 price target back when Tesla was 20x lower than that? I don't know what exact price Tesla was at, but that's where she really built her name, when she said Tesla will get to 4,000, and then by 2020, Tesla got to 4,000. She said this, what was the date? She said this 2018. 2018. Now, obviously, the ARK ETF has not done as well, because she filled the ETF up with a lot of other stuff. Other than Tesla, that has not been the best, as you can see right here, 159 during the top, and came all the way back down to 25 in 2022, and Now it's at 47. So it's not been the best return for investors. But she was the earliest in Tesla. For anyone who's never seen this, this is a 2-minute clip. This was back in 2018 when Kathy was one of the only people on the street saying Tesla will go higher.
The break, we were mentioning that there's a Tesla now in space.
Yes.
You like Tesla?
Love Tesla. It's one of our largest holdings, largest in our overall fund. We think that if Elon Musk, SpaceX, can do what they did yesterday in space,
right,
they're going to be able to produce the Model 3.
But they're different companies. It's a whole different business.
Same brain trust.
Do you think, by the way, do you eventually want
rocket
Tesla?
science.
Do you
Rocket
eventually
science.
want Tesla and SpaceX to merge?
No, I kind of like things the way they are right now. I like the focus. I like the focus.
But in the Tesla story and the, we also keep looking at that stock with one big question. If it walks and talks like a car, it must be a car. And so it has 4 wheels, it drives around. All cars will be automated with AI eventually, GM will. Everybody else trades at a 15 to 16 multiple. They trade as if every car is being shot to the sun at some stratospheric number.
Yeah.
Which happens first? All GM goes to a 300 PE or Tesla goes back to 16? Because one of those two has to happen.
No.
But explain that part.
GM is a call option on the future. The future is electric. GM's not electric yet, right? It's the internal combustion engine all the way. The future is transportation as a service, software as a service. You need software engineers for that. GM has great engineers, but they're hardware engineers. They had to go buy Cruise Automation to get those software engineers in Silicon Valley. Then you've got so you've got 2 big model changes: electric, software as a service, gross margins going from 20 to 25, which is the hardware model, to 85, 90%, which is the software as a service model. Completely different DNA. This is where Tesla is going. There's a third problem GM has. It's called distribution. By law, in many states, auto companies cannot do over-the-air updates. Tesla has been doing that regularly. It updates, it improves performance, it corrects mistakes, flaws. GM cannot do that and is really going to have to go maybe through Cruise Automation and rebuild a company.
And now they just got rid of Cruise, right? So, I mean, look, Kathy was sounding prophetic back in the day. That's how she made her name. And that's where we got Tesla to get to the levels that it's currently at right now. All right, is Trump live? All right, here we go. Trump is literally going live just 5 seconds ago. Here we go. Let's see what the executive's orders are and then what he has to say about the tariffs.
And they came out.
The audio sucks. I'll try to find a better stream, but yeah, give me a second. Let me see if I can find a better stream.
Better than me. They came out looking good. If I had that look, I would have been president 20 years ago. I wouldn't have had to wait so long. Yeah, you look great, fellas. But yeah, many of them, I didn't even realize it at the time, but I visited many of you in the hospital. They did an incredible.
Hold on. Do you guys hear that? Do you guys hear that? Yes, yes, yes. Let me play it again. It should be working. Let me try it again right here.
Legislation, what will become legislation, and right now it's an executive order, and having to do mostly with education. And we have our Secretary of Education, Linda McMahon, who's been so incredible over the last few weeks. I've been watching her on television. I'd like to tell her she could do better, but she can't. She can't do any better. So I want to thank you, Linda. Fantastic. And we also have Commerce, and we have Labor with us today, and you have been. Thank you, Laura, very much. And Howard, thank you very much. And we'll take some questions after we're finished. Maybe I'll ask Will to step forward and you can go through some of these. Also, Lindsay, you work with Will, 2 very talented lawyers, as you all know by now.
Thank you, Mr. President.
And we'll go through them. And Linda, why don't you come over here? In fact, why don't the 3 of you come over here?
We also have a special guest with us today, sir.
Oh, that's right. Annette Albright. Where is Annette? Annette Albright, Charlotte Mecklenburg school teacher, very special one. Thank you very much. It's a great honor to have you. Got all sorts of awards for talent. That's good. Thank you very much for being with us. Appreciate it. Thank you. Okay, please.
Sir, the first executive order we have prepared for your attention, there are currently laws on the books requiring certain disclosures of universities when they accept large foreign gifts. We believe that certain universities, including, for example, Harvard, have routinely violated this law, and this law has not been effectively enforced. So this executive order charges your departments and agencies with enforcing the laws on the books with respect to foreign gifts to American universities.
Okay, thank you. Thank you very much. We'll put it right here.
Next for you, sir, university accreditation is currently a process controlled by a number of third-party organizations. That's by statute, by law. Many of those third-party accreditors have relied on sort of woke ideology to accredit universities instead of accrediting based on merit and performance. This executive order affects a number of changes to the university accreditation process, also applies to law schools and other sort of graduate programs. But the basic idea is to force accreditation to be focused on the merit and the actual results that these universities are providing, as opposed to how woke these universities have gotten. So we're setting up new accreditation pathways. We're charging the Department of Education to really look holistically at this accreditation mess and hopefully make it much better.
Will we look into the past people that they've taken? For instance, I hear all about certain great schools, and then we read where they're going to teach people basic math that we can all do very easily, but they can't do. They're, going to the top school, and they come out with a program of teaching basic math to somebody that got into a Harvard or a Princeton or a Yale. Is that part of this?
When universities are not performing appropriately, whether that's in admissions or whether that's in their actual instructional activities, that's certainly something that accreditors should be considering, that right now we believe they're not doing a good enough job of. And I think Secretary McMahon could probably speak to that
What
better than
about
I
that,
could.
Linda? So they're allowing people into school that can't do math, and yet kids who've worked really hard and number one in their class in a high school someplace in New Jersey or in Mississippi, they can't get into the best schools. What is that all about?
Yeah, and I think that gets to your policy, sir, of meritocracy, that we should be looking at those who have real merit to get in, and we have to look harder at those universities that aren't enforcing that.
Okay, thank you. And this pretty much does it, right?
Yes, sir.
Thank you. Okay. Thank you.
Sir, during your first administration, you made promoting historically black colleges and universities, HBCUs, a major priority. This executive order takes existing law on HBCUs and brings it into effect. We're going to be setting up a White House initiative on HBCUs. The basic idea here is making sure that every aspect of your administration is working to ensure that HBCUs are able to do their job as effectively and as efficiently as possible.
Okay. Okay. All right.
This next executive order relates to artificial intelligence education, sir. You've obviously done a lot in the artificial intelligence space already. The basic idea of this executive order is to ensure that we properly train the workforce of the future by ensuring that school children, young Americans are adequately trained in AI tools so that they can be competitive in the economy years from now into the future as AI becomes a bigger and bigger deal.
That's a big deal because AI is where it seems to be at. We have literally trillions of dollars being invested in AI. And somebody today, a very smart person, said that AI is the way to the future. I don't know if that's right or not, but certainly very smart people are investing in it heavily. Good. Okay.
Next, here we have an executive order on workforce development. This executive order is going to charge numerous departments and agencies within the government to reshape the way that we do workforce development. One example from the executive order, for instance, we're looking to get the total number of apprenticeships, new apprenticeships, up to 1 million in the country to ensure that in critical jobs areas, in areas where we currently don't have enough trained workers, that we're recreating that pipeline to ensure that, particularly as we onshore industrial jobs and new industries, that those industries have the workforce they need to be competitive globally.
Right. Very important.
And this is the EO that we're all here working together.
And in a way, this is like a training center, right, for what we're trying to do, which is jobs and great salaries. These are great salaries too.
Right, it's exactly. So all those factories that you're bringing in because of your trade policy, we're going to train people in trade craft, bring back trade craft to America so that people can work in these factories with great paying jobs. And we're going to train them and we're going to remake the American dream for all these people. We're working together.
That's right.
Right, Lori?
Absolutely. This plays right into America at Work Tour, which I have kicked off. We will work with our state partners and work with our businesses to see exactly who they need in that workforce. And we will skill and upskill these apprentices so they can get right to work and get in the field and build back this economy for exactly living the American dream.
Next, sir, we have an executive order on school discipline policies. Under, I believe it was the Biden administration, first Obama and then Biden, the Department of Justice issued guidance that made it almost impossible for schools to enforce adequate disciplinary policies. This created issues in the classroom for teachers and students alike. Basically, they focused on CRT and sort of diversity ideology instead of actually just enforcing the rules in classrooms to ensure a safe learning environment. This executive order revokes that prior guidance and puts us back in a place where hopefully the Department of Education can focus on education and teachers can focus on teaching in a safe environment.
And this was important for you, Linda, as I understand it.
Yeah, absolutely, because it gives teachers the authority now to have discipline in their classroom and discipline the person who is being disruptive.
Great.
We took that away.
Okay. Nice.
Cool.
Here, Linda, you should hold that.
Lastly, sir, we have an executive order on disparate impact theory. This is a theory that underlies a lot of the modern DEI and CRT driven diversity culture. The basic idea here is instructing your departments and agencies to no longer rely on disparate impact theory as they're regulating, as they're issuing guidance, as they're making rules. We want to focus on results. We want to focus on actual fairness. We want to focus on merit, not things like disparate impact theory and the whole sort of diversity, equity, and inclusion cult.
It's getting out of that, huh?
Yes, sir.
After being in that jungle for a long time. Okay. Thank you. Very good job.
Thank you, sir.
Very much.
Appreciate it.
Very much. Would you like to introduce again Annette, and perhaps Annette wants to say something having to do with that?
To
Annette
ask
is
her.
right here.
Yes, Annette. Yes, please come over. Would you like to have some comments to make? I know you're a former Charlotte Mecklenburg school teacher. I'm a North Carolina girl, so
Yes,
it's nice
New
to
Bern.
see you. Yes, from
Yes.
New Bern.
Yes. Thank you so much for having me. Thank you so much. I'm so honored to be here. This has been an 8-year journey for me to raise awareness to the violence that's in public schools and the critical need to address violence in public schools. Again, been doing it 8 years because most administrations like to keep the violence hidden. We have 3 students that should be here with us today. We have Austin McCalf, I'm sorry if I say his name wrong, Serenity Baker, and Nizir Taylor from Charlotte, North Carolina, who was shot in the back. as he was getting off of a school bus because they thought he was a part of a big brawl that happened inside a public high school. So this is very important and critical legislation that we have to keep our educators safe, we have to keep our students safe, and public schools have to be safe environments. So I think, like I said, I've done this journey alone, I've been on it, but I have a whole team behind me now. I spoke at the RNC and I told millions that Donald Trump and his administration was going to make schools great again, and I feel that we're on the right path, and I'm just honored to be here.
Thank you. This to our great vets that are with us, and is it okay if I give her one? What do you think?
Thank you.
very
Thank you
much.
so much. I
Thank you
appreciate it.
very
Thank you.
much.
Thank you. What an honor.
Great job. Could I ask Sarah to speak, Gerardo?
Yes, sir. Thank you.
Tell
Thank
us
you.
a little bit about these great gentlemen.
These heroes, Mr. President, are extraordinary. This is my husband, Michael, and so many of our dear, dear friends who are here today.
Right.
Many of them have met you, sir, in your first administration in the hospital, many times at Walter Reed.
Right.
And they've had long recoveries. Tomorrow, for my husband, marks 15 years since he was wounded in Afghanistan.
Wow.
And on that day, about 6 years ago, he had his 120th surgery post-Afghanistan.
wow.
And you
Oh,
came
my
to see
gosh.
him at Walter Reed.
I
And
did.
so many others. And we saw great reform in the VA, access, same-day access to prosthetics, mental health care, and we know that that is back. We're going to, these gentlemen were saying, Alex here earlier was saying, in the last few years when he's gone to get a wheelchair, the VA has asked him, this gentleman, they've asked him to prove that he still has his injuries, as though maybe his limbs would grow back. And they
Wow.
unfortunately did not. Yes, and we've seen that many times. And so we're excited for you bringing back the VA accountability, Mission Act, community care, that were the hallmark of your first term. And we're so excited, sir, to be here. We're honored to be here. And thank you for all you do for our
Well,
nation's heroes.
Thank you. Who's that picture on there?
That is Joe Biden, and it says, "Let's go, Brandon."
I'm saying, what was that picture? That's great.
I told him he wasn't allowed to ask you to
That's
sign it.
That's very good. Well, thank you all very much. Would you like to say anything, fellas? There's a big chance you have a lot of good people watching that believe in you. They happen to be the media, but they believe very much in you like I do. Anybody?
Mr. President, we're very happy with the energy that this administration is bringing, and it's an administration that does what it promises. And so we're behind you. We believe in you, and I think we all love you. We got to speak for everybody.
Thank you very much. And I'm going to get you a better hat. Say I have better hats. That's a good one. That was the original.
It was.
That means he was there,
I've
right?
been wearing it before it was cool.
That's right. That's an early one. We'll save that one though, right?
Yes, Mr. President.
Thank you. Anybody, please?
Well, I'd like to say, oh, I was just going to say thank you for loving America, sir.
Thank you very
Thank
much.
you so much.
Very nice. Thank you very much. True. Thank you.
Sir Ben just spoke, saved Michael Broder's life. And of course, he goes immediately to say thank you, as he was the one that saved Michael Brado, put him on the helicopter, and got him off the combat zone.
Wow.
So the selflessness of these men is unspeakable.
That's great. See ya.
Yeah, he's alive because of that man right here.
That's very good. And these are amazing people, great heroes. So that's really great. Anybody else? Yes.
I'd like to say it was an honor to serve. You were worth it. This country's worth it. And it's because of what Christ paid for.
Thank you. And we have a spirit that people haven't seen in many years, at least 5. They haven't seen. I think even then, because we've been through so much for the last 4 years together, it was so bad. It was so bad what they've done to the borders, what they've done all over the place. And it's really an honor to be with you, all of you. Incredible. And I'm going to give you these coins that I think you're going to really like them. I think they're the best. These are the best coins. And you have your choice. This is gunmetal. I don't know, soldiers like the black, but I think you like this one. It's okay. A lot of soldiers like the black. Here you go. What do you like?
I'll go to black, Mr.
President.
Yeah.
See, I told you. Have that. These are choices.
I'll take a black one, sir.
Okay, look at this. Yeah, that rarely happens. You're different, huh?
Take a black one, sir.
Oh,
There you go.
that's great.
Call the military.
No, but is that I always say the soldiers, they do like it's gunmetal. What do we like here?
That's what I heard, that it was gun milk.
Trump gold is.
I'm giving him two.
We have 3 girls, they're going to
One for this
fight.
one right here. We'll get another one. Too. Okay. This is actually fun.
I'll take the gold, Mr. President.
Okay, I thought you were going to take that gold one. Okay,
Gold one, sir.
okay, you got it.
I had an opportunity to sail across the Gulf of America 2 days after you named it right.
Oh, wow, isn't that great? It's been an honor. And now people say it routinely.
Yep.
They don't even think about the other, they say it routinely. That's been a great honor for me. Okay,
Take a gold one, sir.
okay. Almost even. I think gold is an edge.
I would love a gold one,
You
sir.
got it.
Thank you so much. Thank
You
you.
go. It picked up at the end, right? So you all okay? That's good. So I want to thank you very much, and especially, that's a great story. Yeah?
Sir.
So what do you think of a guy like that? Pretty good.
Oh, we actually, him and him, we all served together.
Wow.
And Jared over there.
So you
And
guys,
I forgot.
so you guys got hit, huh? Pretty good. You got hit.
Pretty good.
Amazing,
We're in a
amazing.
pretty tough area in Kandahar, in the Argonaut River Valley, right
Right, it's
outside
tough.
Kandahar.
Their unit had a more than 50% Purple Heart rate, sir,
Wow.
in 2010.
You deserve it. You deserve that and more. We appreciate it so much. Brave, really brave, brilliant people. Thank you very much. Do you have any questions of the guys here?
I want to say
President.
thank you to the veterans who are here. Thank you so much for defending us. And then I wanted to ask you, Mr. President, because you said you want to bring the tariffs on China down soon. How soon do you want to bring the tariffs on Chinese goods
Well, that
down?
depends on them. We have a situation where we have a very, very great place. It's called the United States of America, and it's been ripped off for years and years. These people know it. We talked about it before you came in. We've been ripped off by every country in the world practically, and friend and foe. And we're not doing that anymore. So what's happened is Howard, how many countries have we spoken to already?
90.
90. And they all want to make deals, and we're going to make deals, but they're going to be fair deals. They're not going to be rip-off deals. And, you know, we were losing almost $5 billion a year. No country can do that. And now we have it down almost to even, maybe even better than even, because of the tariffs on cars and aluminum and steel. We have tariffs 25% on cars, aluminum and steel. And there's a rush to build new steel plants, a rush to build new aluminum plants, and a biggest rush I've ever seen, that we've ever seen, to build car plants. We have like 11 of them or something, big ones, where you guys maybe work. Maybe you won't want to work, you'll do something else instead of that. But if you like cars, you'd like to work on one of these plants, the biggest plants in the world. 3 of them have left Mexico before construction started, 1 of them during construction. And they're coming to this country. They're coming back. Don't forget, and we get along great with Mexico, but Mexico took 32% of our car building business. So it's amazing what's happened. Remember this number, anywhere from $3 to $5 billion a day. That's not $1 million, that's $1 billion a day. Nobody can even imagine it. And that's what we were losing. And, you know, hence we have $36 trillion in debt and everything else. And in the end, I think what's going to happen is we're going to have great deals. And by the way, if we don't have a deal with a company or a country, we're going to set the tariff. We just set the tariff. It's something that we think that will happen, I'd say, over the next couple of weeks. Wouldn't you say? I think so. Over the next 2-3 weeks, we'll be setting the number. And we're going to pick, could be for China too, could be for China. We're dealing with almost all of them. Too many to fully deal with, but we're going to be fair to them. But we're dealing with a lot of countries right now, and could be with China, but maybe we'll make a special, you know, a deal, and we'll see what it will be. Right now, it's 145%. That's very high. It got there because of the fentanyl. They're sending, you know, massive amounts of fentanyl into our country and killing a lot of people, probably 200,000 plus a year, wiping them out. You probably all have friends who were killed. Somebody was killed in your family or your friends with fentanyl, and somehow it's made almost exclusively in China, and as you know, we essentially taxed them 10 and then another 10. We also taxed Mexico 25 and we taxed Canada 25. And that's the kind of money that's what's pouring into our country right now. And it's gotten us down from losing $3 to $5 billion a day to actually making money, but breaking even, let's say, but we're going to make a lot of money. And that money is going to be used to reduce taxes. We're going to get big tax breaks. We're going to, there was a time, I said it this morning, I think some of you were there. There was a time from 1870 to 1913, it was a long time ago, we were an all tariff nation. Foreign nations paid taxes. They paid money to us in the form of tariffs. And that was when we were the wealthiest. We were the wealthiest proportionately that we ever were. And they formed committees in 1887 in particular, but they formed committees to determine what we should do with all the money. We had so much money, you guys would have loved it. We had so much money, they didn't know what to do with it. We gave it away to different causes, and you haven't seen that too much anymore, although we give plenty away, but now we shouldn't be giving it away. We have to take care of ourselves first, right? Absolutely. But we were very wealthy and proportionately the wealthiest we ever were. We built the Panama Canal. Jimmy Carter gave that away for $1, by the way. One of the most profitable things ever built, the Panama Canal. We gave it away for $1 to Panama. Why? I don't know. Nobody knows, but that's what we had. We had people like that sitting behind this desk. And that shouldn't have happened. Panama Canal, it was the most expensive thing ever built by our country in history. I'm talking relative dollars. We've never built anything so expensive. I think it was the equivalent of $1.7 billion. And we've never built anything like that. We built a lot of things, but never so expensive. Then we started building other things. We had a lot of money to do it, all based on foreign countries coming in and paying us tariffs. And we're doing that again. And I think we're going to make so much that we're going to be able to reduce taxes in this country by a lot. And we're also going to treat those countries very fairly. But if we don't make a deal, which is possible, we're going to just set the price. Because you remember, they have to come in, they want to come in here and they want to do business with the United States. So we want to set a fair price, and we'll do that. We're going to be very fair, but we'll set a fair price. And then they can make a determination as to whether or not they want to do business with the United States. And I think most of them will. And I think we're going to treat them very fairly.
Were you worried about what the 145% tariffs were doing to small businesses here in the U.S.? Is that why you're bringing it down?
No, I haven't brought it down. I haven't brought it still 145. I haven't brought it down. I said it's a high tariff. It is a high tariff, but I haven't brought it down. It basically means China's not doing any business with us, essentially, because it's a very high number. So when you add that to the price of a product, a lot of those products aren't going to sell. But China's not doing any business. They were doing $1.1 trillion. Think of that, $1.1 trillion. You know what that is? And it was just very unfair to us. And we were doing very little, relatively very little with them. It was very one-sided. But we get along. I get along very well with President Xi, and I hope we can make a deal. Otherwise, we'll set a price, and if they don't, that's okay.
So on your trip to Rome, there's a lot of leaders attending the Pope's funeral who also said they'd like to meet with you while you're there. Do you have any meetings set up?
Yes, I do. I have a lot of meetings set up. I don't know if I can do it. Do you want to help me out, fellas? I got a lot of meetings. I got every leader in the world, which tells you that we have a good product. It's called the United States of America, and it's great. And these people know about it better than anybody in this room. But we have a great place, and it should be a lot greater. And that's what we're going to do. We're going to make it greater than ever before. It's very simple.
Who are you going to be meeting with, President Zelensky?
Well, I have a lot of meetings set up, yeah.
And are you bringing anyone with you in the U.S. delegation to the funeral, like Secretary Rubio or a former president?
We have a couple of people coming. We'll announce it probably this evening or tomorrow. First Lady's going, and some people are coming with me from staff. But we'll have a number of people going. I'm sure it's going to be a beautiful ceremony. Okay?
So I had one on Ukraine, but I wanted to ask you one about veterans since they are here today, and thank you for your service and sacrifice. I wanted to ask you about the cuts that have been made, including with the VA. Can you assure that veterans like these men here those that have been suffering from mental health issues or burn pits, for example,
Yeah.
will be taken care of.
Yeah, very
with
much
the
so.
cuts.
In fact, they will tell you it's been better with me than any president in history. We had a 92% approval rating, which is unheard of, up 50 points from the previous administration in my first 4 years. And we're doing better now. And in fact, now they have something, the call-in doctor stuff where it's really become, it's really become modernized and great. We don't have to go and travel sometimes long distances to get to a clinic or get to the VA. And I just heard this morning, I was listening to Doug Collins, who's the secretary. He was being interviewed, and the numbers are incredible. The approval ratings are the highest I've never heard numbers like this. It's better than the first 4 years. So no, there's no group of people more important than the people in this room. And I'm not talking about the media. I'm talking about these people right here. There's no group, and they're going to be taken really well care of. That's very important to me.
And on the war in Ukraine, are you going to be meeting with President Zelensky? He's asked to meet with you this weekend. Will you be meeting with him?
I don't know. I don't know that he's going to the funeral or not, but I just hope he gets this thing solved, because we're losing about, think of this, 5,000. I was saying 2,500, and everyone was telling me that's low. 5,000 soldiers are being killed every week, approximately. Think of that. Every week, 5,000 soldiers, but let's say from 3,000 to 5,000 are being killed. They're Russian and Ukrainian. They're not Americans, but they're Russian, but they're people. And they're humans. They're human beings. They have families. They wave goodbye to their son, and then they get a call that the son's no longer there. It's a vicious war. And if I can help solve it, we're not losing our soldiers, but we're losing soldiers, a lot of people. And if I can solve it because of a certain ability, that would be great. And if it doesn't happen, I will say that I think Russia is ready. And a lot of people said Russia wanted to go for the whole thing. And I think we have a deal with Russia. We have to get a deal with Zelensky. And I hope that Zelensky, I thought it might be easier to deal with Zelensky. So far, it's been harder, but that's okay. It's all right. But I think we have a deal with both. I hope they do it, because I'm looking to save. And, we spend a lot of money, but this is about a lot of humanity. This is the worst. I get the pictures, the satellite pictures. I've never seen anything like it, of the fields after some of these battles. It's horrible that it's going for nothing. We would have never had this problem. You would have never had that war if I were president. I guarantee you that. And for 4 years, you didn't have it.
Are you going to meet with Vladimir Putin? Are you going to meet with Vladimir
I won't be
Putin
meeting
in
with
Saudi Arabia?
It's possible, but most likely not. I think we'll meet with him shortly thereafter.
What is Mr. Wickoff going to present to the
Federal Reserve Chairman Jerome Powell, during the Biden administration in the campaign, with inflation raging, he lowered interest rates 2 times.
That's right.
Now, with 2 consecutive months of inflation being down, all economic theory you learned in the 8th grade says it's time to cut rates when inflation is down.
You're right.
He's not done that. Have you had any direct conversation with him?
No, I haven't. I haven't called him. I might call him. I haven't called him, but I believe he's making a mistake by not lowering interest rates. And I think as well as we're doing, we'd do much better. He's keeping rates too high. He historically has been late, except when it came to Biden. He was recommended by a certain person that I'm not particularly happy with, but he will hopefully do the right thing. The right thing is to lower interest rates. So we'll see what happens. I think we're sitting on something that's going to be very good. With all the tariff money starting to come in, our country is going to be doing really well. And hopefully we don't have inflation. Groceries are down. When I first came in, you people were there. They hit me with the first day that I was president. Somebody started screaming at me that eggs are up. I said, I just got here. And in the first week, they were going crazy. You remember that, Linda? Yes. They were going crazy. They're saying egg prices are too. I said, I'm here for 1 week. Just leave me alone. This is a fake news radio. And I said, what can I tell you? But Brooke Rollins, our Secretary of Agriculture, and a group working with her have done an amazing job. And egg prices have gone down 87%. Energy now is down $65 a barrel. They have some energy selling gasoline for less than $2 in a couple of states, Alabama, a couple of great states, but all over the country, it's way down from what it was 6 months ago, 3 months ago. And that has a lot to do with the war. When Biden allowed energy to skyrocket, it just skyrocketed. It was out of control. Russia made a lot more money because they make their money on energy. And I kept saying, he supposedly wants to end the war, but he lets energy go out of control. Well, I've gotten it. We are drilling like crazy right now, and we have it down to $65 a barrel. It went up to almost $100 a barrel. And at that number, Putin and Russia made a lot of money. So I think one of the reasons, look, I think he has a certain respect for me. But one of the big reasons is oil prices are down. I think this is a good time to get the war settled. Thank you.
Just one more question.
Thank you for that question.
For those of us that live here in the district, you said when you came in, you were going to make Washington, D.C. great again.
Right.
One of the issues we've got right now is we understand there might be an imminent deal between the owner of the Washington football team, whatever you want to call them now, Commanders, and locally in getting the Redskins back to DC and RFK Stadium. That's on federal property.
Right.
Are you going to be involved in that negotiation?
Yeah.
And would one of the stipulations be they change the name back to the Redskins?
Oh, I say, well, that's a little bit, nobody's asked me that one. Look, I think when the Indian population is a great part of this country, a great heritage. And we were talking about Massapequa, Long Island, the Chiefs, they call themselves the Chiefs, or the Kansas City Chiefs. They're not changing their name. A great team, great people, great owners, great coach and quarterback. I love the quarterback, like his girlfriend too, and his wife. His wife is great. She's been a big fan. His quarterback's mother is incredible. I like that team. They're called the Chiefs, and frankly, I see nothing wrong with it. They call them the Warriors, and not that team, but a lot of other teams, and all of these Indian surnames and different names. And I'm saying that I think that's a positive thing. And when you go back to Indians, they told us they don't know why these names are being taken off. They're trying to. I think it's degrading to the Indian population, and it's a great population, and they like when they're called by various names. Now, Washington. The Redskins, perhaps that's a little bit different, but I can tell you that I spoke to people of Indian heritage that love that name and they love that team. And I think it's I think it's a superior name to what they have right now. And it had heritage behind it. It had something special. But a lot of the names having to do with, different places, not just Indians, but I think they changed the name of the Cleveland Indians. Why would you take the name Indians off the Cleveland Indians? And now it's called the Cleveland something else, right? Guardians. It just doesn't make sense to me. So we're about bringing common sense back to this country. And it may be popular or unpopular what I'm saying, and I've just said to you. He's a nice guy. He got a lot out of me on this one, but I think most people agree with me. I think it really is demeaning to Indians. But to change the name of the Cleveland Indians as an example to the Cleveland Guardians, is not the same, and I'm sure it has an impact on the team. Please.
Sir, thank you, sir. Elon Musk said he'll be stepping back from his work with Doge a little bit and only get dedicated maybe a day or two a week to it. How long would you like to see that continue, and how involved would you like to see him continue to be after?
Well, first of all, I can't speak more highly about any individual. He's an incredible guy. He's a brilliant guy. He's a wonderful person. I've seen him with his family. I've seen him with a lot of his children. He's got a lot of children. He treats them good. He loves his children. But he's a brilliant guy. And he was a tremendous help, both in the campaign and in what he's done with Doge. And, we're talking about almost $200 billion and rising fast, because many of the things that we were looking at are now being found out to be fact. It's terrible. I mean, the fraud, the waste, the abuse, the everything that's happened is just terrible. So I also know that he was treated very unfairly by I guess you'd call it the public, by some of the public, not by all of it. So he makes an incredible car, makes everything he does is good, but they took it out on Tesla. And I just thought it was so unfair because he's trying to help the country, but he has helped the country. I also want him to make sure that he's going to be in great shape. And I know he is. I mean, he's going to do great. He loves the country. He didn't need to do this. He did it. And I told him, I said, whenever you're ready, I'd like to keep him for a long time, but whenever you're ready, he's an exceptional guy. When you see those rockets go up and come back and land in the same gantry, nobody else can do that but this man. So he's just an incredible person, and he's a friend of mine, and he's a nice person too. He's a very nice person. He really helped the country, saved us a lot of money. And I heard him say that he'll start easing, he was always at this time going to ease out. And when he goes back to Tesla, that'll be taken care of. It's artificial. These were sick people that thought they were doing something. He's a great patriot, and it shouldn't be the way, that should never have happened to him. And I will tell you right now, he makes a great product. It's a great car. It's great everything. Starlink is great. What he does is good. He's doing medical things that are amazing. And we have to, at some point, let him go and do that. And we expect him to be doing it about this time. But I'll talk to Elon about it. Thank you for the question.
Mr. President.
A second question. Canada has an election coming up. Do you have a prediction for that? And what do you think the results of
With respect to Canada?
with the negotiations?
Oh, I don't want to predict other nations' elections. It's tough enough doing this one. Look, I love the Canadian people. I like Canada, but it's costing us $200 billion a year to support Canada. $200 billion. And I say, why are we doing that? You know what? We can make our own cars. We have more energy than they do. We have more energy than anybody in the world. We don't need their lumber, obviously. We have more lumber. We have a lot of lumber. We have a lot of everything that they sell us. But in particular, cars, they took a large percentage of the car making, and I want to bring it back to this country. I really don't want cars from Canada. So when I put tariffs on Canada, they're paying 25%, but that could go up in terms of cars. When we put tariffs on, all we're doing is we're saying we don't want your cars in all due respect. We want really to make our own cars, which is what we're doing in record numbers now. We're going to be at record levels in a very near future because of all the car plants that are being built. And I'd rather see them made in Michigan and made in South Carolina and made in different states, Tennessee. We have a lot of great car making states, and we have some that aren't car making yet, but they will soon be car making states. And that's what I want to see for our country. At the same time, I want to help Canada. I have spoken to the current Prime Minister. He was very, very nice, I will say. Very nice. We had a couple of very nice conversations, very good. But I don't think it's appropriate for me to get involved in their election.
Mr. President,
If I may, this deal that you have with Russia, does it include recognizing Russia's sovereignty over Crimea?
Well, everything is good. Look, I just want to see the war end. I don't care. If they're both happy, they both sign an agreement. I have no favorites. I don't want to have any favorites. I want to have a deal done. I want to save the lives. Now, with that being said, we're spending hundreds of billions of dollars through Biden. Biden should have never let that war happen. We're spending hundreds of billions, maybe $350 billion we've given to Ukraine. And we could use that money right here. So I'd like to see that. But most importantly right now is when I see the pictures, the satellite pictures of the battlefield, if I can stop that because of an ability I have to do things, I want to see if I can do that. Yeah.
Mr. President, on tariffs, you just mentioned that 25% could go up on cars in terms of Canada. Does that mean that you're considering changes to the auto tariffs and auto parts?
No, we're not considering it now, but at some point it could go up, yeah, because again, we don't really want Canada to make cars for us, to put it bluntly. We want to make our own cars, and we're now equipped to do that. They took a lot of our car business. Mexico, too, took a lot of our car business. We want to make the cars here. I'm running this country. I'm not running Canada. And that's why I asked Trudeau, who I call Governor Trudeau affectionately, but I asked him, why are we spending $200 billion to support Canada, to subsidize Canada? And he was unable to answer the question. I mean, why are we doing that? And I have to be honest, as a state, it works great. As a nation, considering the fact that most of the nation, 95% of Canada, what they do is they buy from us and they sell to us. They sell to us. If we didn't buy their oil, and we don't need their oil. We have more oil than anyone, but we don't need their oil. We don't need their lumber. We don't need their cars. We don't need anything. So I said, why are we doing this? Why are we spending $200 billion? It doesn't make sense. If we needed something, that would be a different subject. So I'm working well with Canada. We're doing very well. We're working on a deal. We'll see what happens. But again, why, representing this country, why are we spending $200 billion to support and subsidize another country? Because if they didn't have us, and if we didn't spend that money, as Trudeau told me, they would cease to exist. He said that to me. They would cease to exist, which is true, certainly as a country.
And then on tourism, there's been a steep drop off in international travel to the United States. It was down 12% last month, down even more from Western Europe. Why do you think that there are fewer people suddenly who want to travel to the United States?
Well, there could be a little, there's a little nationalism there, I guess, perhaps. It's not a big deal, but, with the dollar being where it is, because, China would always fight for having a low dollar. Japan would always fight for having a low dollar, meaning a low yen, or in the case of China, the yuan. They'd always want to have I'd speak to President Xi a lot. I'd say it's unfair that your yuan is so low. I'd call up a great man, Prime Minister Abe, great man, Shinzo, who was unfortunately assassinated. And I used to tell you, he was a good friend of mine. I used to say, Shinzo, you can't let your yen go down. It makes it very hard for us to sell tractors. It makes it very hard to us to get tourism. And our dollar is a little bit on the low side. And that means that a lot of tourism is going to come in. But I could see a little bit nationalism at work. And I can see it likewise with us, not wanting to go to certain countries. But that will work out very
Do
easily.
you think some people are scared to come here because they hear the stories of tourists who are detained for a few days
No.
or even a week or two?
No, we treat our tourists great. We're the tourism capital of the world. There's no place like this. And there may be a little bit of nationalism, but I doubt it. I actually doubt it. Yeah.
Mr. President, has there been any direct contact between the U.S. and China for trade at all?
Yeah, of course.
And
Every day.
every day. And then secondly, would you support a millionaire tax?
I think it would be very disruptive because a lot of the millionaires would leave the country. In the old days, they left states. They go from one state to the other. Now with transportation so quick and so easy, they leave countries. You'll lose a lot of money if you do that. And other countries that have done it have lost a lot of people. They lose their wealthy people. That would be bad because the wealthy people pay the tax. Okay?
Sir, how did the talks today go in London? Do you think that the asks from Ukraine and
I think they went well. I mean, we got to get two strong people, two smart people to agree. And as soon as they agree, the killing will stop. But yeah, I think they went well, pretty well.
So Mr. President, we understand that your economic team, many of them are here today, JD Vance, has negotiated what's been called a monster trade deal with India, like biggest one ever. Can you share with us what some of the framework of that might be?
You said England.
India.
India?
India.
Oh.
Mother.
They're not very complicated, these deals. It's about the tariffs. India charges almost more than any other country in the world. And believe it or not, we do very little business with India, other than the fact that I like the Prime Minister very much. He's a friend of mine. He was here 2 weeks ago, as you know. And we stood right outside at a news conference. Unfortunately, the grass was very wet. And it was very hard for people to stand on the grass. They got their shoes all ruined. But other than that, it was a very good news conference. And he's a great guy. But we do very little business. You know why? Because their tariffs are so high. They have among the highest tariffs, higher than China. They have among the highest tariffs in the world. And I understand they're going to reduce those tariffs. But it's really, it's really sort of their problem, not ours. We do very, very little purchasing in India because and selling. We do very little selling. I mean, Harley Davidson, I said, how are you doing in India? This is about 6 years ago. They came to lunch as a great American company. They make the motorcycles. And I said, how are you doing in India, as an example? Well, we don't do any business there. Why? Because the tariffs are too high. I said, that's interesting. Well, what are you going to do? He said, well, we're going to build a plant in India. And that's what they did. I don't want that to happen. They were forced to build a plant. Well, essentially what we're doing is the same thing. Remember, there's no tariff when they build their plant here. And everybody wants to build because they don't want, and the higher the tariffs go, the more likely it is they come in and build a plant. You know, I mean, if it's 25%, that's fine. If it's 50%, you get more plants. 75, you get more. At 100, you get more than that. And they're all coming in at numbers that I don't think, Howard, there's ever been numbers like we've seen.
Never.
$7-8 trillion worth in 2 months. Because it took me a month to get started, in all fairness, but in 2 months we did this, and now we're coming up on 100 days, first 100 days, and I think we're going to be close to $8 trillion. There was never any president that did even a tiny percentage of that. Okay, any other questions?
Sure. What about a deal signed, one of the deals signed by your 100-day mark, and China is saying that we're threatening and blackmailing them into a deal? What would be your response?
Well, I mean, China, look, I have great relationships in China with President Xi in particular, but China has been charging us massive tariffs for many years. That's one of the reasons they were able to steal so many of our companies. They took our companies out of America and they built their plants in China. And one of those things, so now we're reversing it, but at levels that nobody's ever seen before. No, we're going to get along great with China. I have no doubt about it. Thank you very much, everybody.
Thank you.
All right. Another press conference by the president is done. I'm just tired, bro. I'm just tired. I don't even know, dude. Futures are red after hours. They're not like tanking, but they are red, down about 0.15 across the board. Well, Trump said, I love the Canadians, but they're costing us too much money and I don't want Canadian cars. He also said 25% tariffs on Canada for their autos will persist. So no updates on auto tariffs going down or steel and aluminum tariffs going down. He didn't make a point to clarify any of that. He then said, I personally not talked to Powell, but I might call him soon. And then he said, Elon is brilliant, but he deserves to go back to Tesla whenever he likes. The biggest headline is he said, I have not brought down the 145% tariffs. And this is why people feel the whiplash of this volatility, because yesterday, I mean, quite explicitly, he said, we will be taking down the 145% tariffs, not to zero, but to something lower. Today, it kind of sounds like he's not ready to take down those tariffs. And I don't think anyone expects it to go away tomorrow, but the way he said it, you can tell it's kind of like, hey, I haven't done anything yet. And so don't act like I've done anything dramatic with the tariffs. The tariffs are still 145%. And he then threw out a timeline that we're going to be waiting over the next couple weeks, 2 to 3 weeks, to set the rates on China. I thought markets would really get hit once he said that. Markets were relatively flat. Again, we're down a little bit on the S&P, down 0.05%. I thought we would lose a little bit more steam after hours. We didn't when they said that. And I think the market's kind of calling the bluff right here. And the market is saying, you know what? Every time you tell us that you're bringing the tariffs up or down, at this point, it doesn't matter, because we know eventually that you're going to walk back most of the stuff that you're saying right now. I think that's how the market interpreted it, or else the market should have been down like 1%, because it was up 1% yesterday after hours off getting rid of the 145% tariffs. If Trump is confirming we're not actually getting rid of it, then markets should reverse. But I think the reason they're not reversing here is because people are finally thinking, you know what? We know that he's not really going to be able to put 145% tariffs. We know that China's not going to accept it. We know eventually there will be a negotiation. So there's no reason to sell on that headline, because that headline is not real. Basically, people are not really believing, in my opinion, some of these comments by Trump anymore. Robinhood was up 1% after hours. Now it's flat. The S&P was up 0.5%. Now it's red. Tesla was up almost 2% after hours. Now that's down 0.3%. GM and Ford were moving on that auto headline. Wow. GM goes negative. It was up 5%, goes negative. Ford was up 2%. Ford goes negative. Lack of clarity on the auto tariffs and the doubling down. NVIDIA also going negative. The doubling down on the 25% tariffs for autos in Canada. That was enough to get rid of any resemblance of a pump currently right now after hours. So there you go. If anyone's tired, I think it's okay to feel tired, dude. There's a lot of volatility. I think this has been the conclusion most of us have had all year, but I think now it's more prevalent than ever. If the market tanks, it's just to buy the dip. It is like, does anyone realistically believe we're going to have these insane tariff rates across the world? No. Why? Because the bond market's going to scream. As we got into the end of the close, the 10-year right here, very close to 4.4. And we know that he's going to pivot. And based on how he's been hinting that he's going to get rid of the tariffs, then he doesn't really confirm it. Then Bessent says it. Then Bessent kind of walks it back. We know that there's not really any consistent narrative, which will create uncertainty and will create dips. But I think you just buy those dips. Like, we knew the whole freaking year to buy the dip, but I think now we've got a more confirmed stance that this administration is going to be volatile and eventually this will be resolved. But until then, you buy the dip. Because like, there's no way that this doesn't get resolved. Maybe not in May, maybe not in June, maybe not in July, but I think at some point this year, we are going to get some resolutions with everything going on. Earnings have been going well, so that's one good thing. Inflation's coming down. Again, I think this 145% is going to go down a lot, confirming it today. So if we do see some aggressive dips again, like we saw, 2 weeks ago, I think you buy those dips. We need 3.3% of the 10-year. I agree. We're almost at 4.4. And again, if it starts screaming again, then I think that we'll have another pivot in whatever way that Trump needs to make the pivot. I mean, like, can we step back and remember why yesterday he said what he said about China? 2 reasons. Number one, Bessent said it privately to some JP Morgan people. And that means Trump had to kind of confirm what Bessent said, or maybe Bessent told Trump to say what he said and echo and double down on those statements so that they're sort of having one unified stance. Number 2, the bond market was screaming again after hours. And I think they had to calm it down. And by calming it down, they had to say something that would get the markets to relax. Oh boy. Oh boy. Oh boy. Oh boy. Futures, where are futures? We are pretty much red across the board. Oh yeah, it's getting worse. Now it's down about 0.3% across the board. Small caps down 0.2. Tech down 0.27 on the NASDAQ, S&P down 0.2, and then the Dow Jones down 0.3 as well. All right. This is the nature of the markets. This is the nature of the markets right now. Whatever pump we got today, and again, we lost about 50% of the pump intraday from the highs, which I think that was expected. But if we lose more of it, wow, look at NVIDIA, down almost 1%. If we lose more of it tomorrow, I mean, it's the same whiplash we've been experiencing for the past couple of weeks. Nothing really changed. Southwest still down 3%. Let me check the companies that reported earnings today. Chipotle's down 2, IBM's down 6, dude. Holy crap. Don't know what IBM said to get the market that upset. ServiceNow, that's a beast, bro. ServiceNow up almost 11% after hours, even with everything Trump said, not giving up its gains. Texas Instruments still up 4%. Lam Research gave up most of their gains. They were up 5%. Now they're up 1%. And then Discover Financial is up a little bit after hours, about 0.73%. Doge lost IBM 15 contracts. They didn't mention that in the press release, but if they said that on the call, yeah, that could be your headline to get Doge down, or to get IBM down. Doge cuts 15 IBM contracts. Oh yeah, I see it right here. Yep, there you go. Says Doge hit 15 of their that was not announced in the initial 5 minutes of the earnings report. That makes sense now why we're seeing that 6% down. I mean, 15 I don't know how much the contracts were worth, but 15 contracts, you would have to imagine it was upwards of a couple $100 million on those contracts. Oh, those contracts went to Palantir. Oh my gosh. Your thoughts on Google tomorrow? I think Google's going to do well. I'm only afraid about ad budgets coming down. Then again, I don't think ad budgets are going to be absolutely destroyed. So if Google says, hey, ad budgets are fine, we're reaffirming our guidance, we reaffirm our CapEx, we're going to keep buying back our shares, yada, yada. I mean, does it have to pump? No, but I definitely don't think Google has to get cheaper than what it is right now. I mean, it's trading at 17 times. For this thing to trade at what, 12 times, 13 times, you would need a 10, 15%, 20% reduction tomorrow. I mean, what takes Google down 20%? Like realistically, what takes it down a couple $100 billion in market cap? I feel like there would have to be something really bad. And I think Google's a solid company and they're not going to report really bad earnings, even if they report mediocre earnings. So I really don't expect much out of Google tomorrow. But I definitely don't expect it to tank dramatically. If it goes down, maybe 3 to 4%. If it goes up, maybe 5 to 6%, something like that. But I don't think it has to go crazy to the upside or the downside. And if it does, I think it would be a buying opportunity. I mean, if there's some stupid reason that Google goes down to like 135 or something. Palantir just lost 100. Damn it. It was nice though during the day, right? It was nice to just see 100 all day, 101, 102, 99.87 after hours. Palantir now down about 1%. No technical Tuesday this week. Jason's off for the rest of the week. We'll be back next week. Yesterday we had Tesla earnings, so we couldn't do it yesterday. What else? Buying more Grab and VG. One thing on Grab. So I talked about it today. For those that didn't see the headline, Grab just appointed someone on their board of directors who is a investment banker specializing in merger and acquisitions. If you're in the Grab ecosystem, you know they have a big company in Indonesia that they have been rumored for the past couple of months to be acquiring. That would completely, in my opinion, change the Grab narrative. So the fact that they put an M&A investment banker on their board is very exciting. In terms of the option flow, there was about $100,015 spent on the May 2nd 450 call. So that's expiring in what, 10 days? Not a crazy amount of money that was spent on that, but given that it's going to be expiring soon, 450, stock's kind of close to that, around 430. You do have some bullish option flow going into the name for next week. All right, there you go. That is it. All right, so here's the final thing we can do on the show today. And if you don't want to sit around for that, then you can leave. Did you talk about Apple and Meta being fined by the EU? Yes, we talked about that in the morning. The White House did respond. It's about an $800 million fine on Apple and Meta. I don't even know what the purpose of the fine is, but the White House said we will not tolerate bullying by the EU on our tech companies. So the White House did say, hey, if you're trying to bully us, we're not going to tolerate it. So, yeah, but it looks like the EU might be coming back to tech earnings to tech companies as a response to the tariffs. Okay, so Jeremy sold Tesla. He just put out his video on it. Who wants to watch it? It's like a 30-minute video. I think we can skip around a little bit, but I am also curious about his thoughts. So I would actually watch it. If you guys want to watch it together, we can watch it. It's funny, a couple of years ago when I first started YouTube, Jeremy was the first person who reacted to one of my Palantir interviews, like the whole thing. It was like a 54-minute interview, and he reacted to the whole thing. And I was at the place I used to work at, and I looked at my phone, and I had like 400 subscribers in like an hour, and I was like, "What is going on?" And there was like Jeremy reacting. He just played the whole interview on his channel, reacting to it. It was one of the OG Palantir interviews with Sean, for those that remember. But yeah, now it's funny. A couple years later, I'm reacting to him. So I think we can watch that, right? If you don't want to watch that, you can leave. But I am curious why he sold some Tesla. And so, all right, everyone's saying yes. All right, cool. So we will. Well, yeah, I'll increase the speed on that as well. And again, we don't have to watch the entire thing, but I'm just from a shareholder perspective that's been there since the beginning. I am curious what the logic was on finally pulling the trigger and getting out of it. All right, cool. Let me pull it up. You guys remember the Sean interview, right? That was like one of the first viral Palantir interviews, because ironically, Sean worked at IBM before. He's a data analytics consultant, and so he actually bought Palantir in the private markets back in 2018. So when we came across each other, I was like, dude, we got to do an interview. And that was a lot of people's first introduction to Palantir back at $7-8. That was February 2022. So that was a while ago. And it helped Jeremy better understand Palantir as well. All right, here we go. This is Jeremy on why he sold Tesla.
Including obviously the United States, right? United States has kind of been a little bit of a lagger, but even in the United States, if we look at the latest market share data, up to 8% roughly of vehicles sold. Look at this, in 2024, the US EV market has reached an 8.1% market share. So clearly EVs, that were the future are here now, right? They're becoming a bigger and bigger thing. Now with all that, you would expect Tesla to be tearing it up, right? Well, if we look back a few years ago, Tesla had around a 75% market share in the United States when it came to electric vehicles. Now, what do you think that number is now? Well, we can fast forward a little bit. And in the latest data we have, Tesla's all the way down to 43% of the market share. There's a clear trend that Tesla's market share is eroding and eroding pretty darn rapidly. Like if we just go back to this same period last year, we are 52% market share, now down to 43%. If we go back to the previous year's quarter, we are 62% market share, right? So it is not just that Tesla's losing market share, it's that it's losing market share at an accelerating clip. In that we don't even know where Tesla's market share is going to end up. Where are they going to end up of EVs? 5%, 10%, 20%? Like we don't know. We just know it's going lower and lower and lower. And it's pretty dramatic. I mean, to lose another almost 9 percentage points of market share just in the past year, no bueno, right? No. And if we look at electric vehicle sales volume change by automaker 2024 versus 2023, what you're going to find is Tesla was not just the worst, but by far and away the worst when it came to electric vehicle sales. That's huge problems. And by the way, this is 2024 numbers. This is before all the protests. So if you think this has anything to do with latest stuff, that drama about people protesting Tesla and out in front of the Tesla dealerships and blah, 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 this has nothing to do with this. We're looking at 2024 numbers right now, what I'm showing you. And so this is way before all of that. And so there's a clear trend that Tesla has major issues inside the United States of America, right? Now, the Chinese have been taking EVs more serious than anybody, than any country by a mile, right? And it's gotten to the 2024, nearly 1 out of every 2 cars sold in China was an electric vehicle. EVs are a huge thing in China, and probably in the next few years, like EVs will be like nearly 100% of sales. Like they'll likely end up completely outlawing anything other than an EV, essentially, right? Now, what has happened to Tesla in China? Well, now BYD has surpassed Tesla in terms of both sales and revenue now at this point in time. And honestly, that gap is going to eventually widen quite dramatically, it looks like here, right? Now, in China, the issue is like Tesla's having trouble moving product now there, but even when you do move product, there's little money to be made because the market is so competitive. Like in China, there's at least 5 to 10 serious EV competitors in China. And so when you have that many serious competitors that have very compelling products in the market, and I have friends that go to China and they'll send me photos when they're over there and whatnot, and folks in my private stock group that will send me photos, the product looks good. Like the cars on the exterior look pretty darn attractive. The software looks phenomenal that these cars have. The range looks good. And it's like there's a bunch of competitors in China. And so it's just going to get more competitive over the next few years. And so even when you do sell an EV in China, there's very, very little money to even be made over there now at this point in time, right? Now, if we look at the number of Tesla vehicles sold worldwide, right, what we're going to find is the early signs that Tesla was already starting to have some troubles was back in 2023. Because basically, Elon was thinking like production was going to go up easily like 50% a year, right? And we already started to have some troubles in 2023. But then last year, 2024, was kind of like, it's obvious now. Because volumes didn't go up that 50%. They actually went down. Vehicles delivered worldwide went down for Tesla in 2024. And that's even with all the price cuts at Tesla. Think about all the price cutting Tesla did in 2023 and going into 2024.
Okay, so one of his first core arguments, by the way, do I sound like this? Do I sound this fast? I can't believe I conditioned you guys to listen to me sounding this fast every day. But his first argument is, hey, they're just not selling that many cars. Which, it's a reasonable argument. But his first argument is, hey, they told us they would be selling way more cars than they are. They're just not selling that many cars.
2024, right? Price cut after price cut. It's all we heard. And even with all those price cuts, they still had volumes be down. That's no bueno whatsoever, right? And, it's sad because it didn't really have to be this way in regards to Tesla sales volumes going down, right? Because Tesla's product is great. Like phenomenal product. I drive all types of different cars throughout my life. I've experienced them. I'll even rent cars, everything from a BMW to Mercedes to just, SUVs and American products. At the end of the day, like Tesla has a phenomenal product. I would, like if somebody said, even my first Tesla ever was a Model 3, from there I got a Model X, and from there I got a Model S Plaid, right? And I have nothing but good things to say about Tesla. Nothing as far as the product goes. And so it sucks that we're in a situation where, sales are literally trending negative when the product is actually a very, very good product they have in the market, but it doesn't matter. And I bring it back to an example of when I was in, I think I was probably in the 8th grade, maybe the 9th grade. And for Christmas one year, my big present I got was an MP3 player, but it wasn't an iPod. It was a Sony product. And the Sony product was phenomenal. It was by far and away, in my opinion, way better than an iPod. It actually had a touch screen and everything. Like that wasn't even stuff Apple had back then. It was all like analog, right? But at the end of the day, did that Sony product ever take off? No. Even though it was a better product, no, it never took off. Apple understood the marketing game better, understood how to sell better, and obviously the rest is history, right? So it's just because you got a good product in the market doesn't mean anything. And here we are in a moment where Tesla's giving away vehicles. I mean, just giving them away, and they still can't move them. You look at a Model 3. Once again, a phenomenal product. You can say nothing bad about a Model 3. $299 a month to lease that baby with $1,000 down, and you still can't move these? Come on, man. The Model Y lease from $499 The Model Y is an amazing product, arguably the best vehicle in the world for the price point. And you can't move this thing? Like, come on, man. Like, it just should not be this way. It should not be this way at all, right? And you look at, even if you were thinking about buying a vehicle straight up, right? You got the $7,500 federal tax credit that you had for a while, and they still can't move these things. All these price cuts, all these incentives, insanely cheap prices, especially in $20, $25. Like, come on. And we still can't move this product? What is going on here, right? The moral of the story is, in regards to this first point, is Apple has a rotten core. Indicates fungal infection in decay, making Apple unsafe to eat. This is Tesla, and this is investing in Tesla. When the core of the product, the core of the business is broken, you got big problems. And it's not up for debate. This isn't an opinion. This is a fact. The core of Tesla's business is rotten right now. And that's no bueno. And it's not like it just happened in the last quarter. No, it's been rotten for a while now at this point in time, which gets us into point number 2. Growing categories are about to plummet. Because even if you look past the rotten core of the business, you can say there's 2 segments of Apple's business, of their 3 segments, that have been growing very rapidly. And those businesses are energy generation and storage revenue, which is this line item right here, and services and other revenue. Now, if we go back to a quarter ago, energy generation and storage revenue was up 113% year over year. Services and other revenue was up 31% year over year. Extremely strong growth. So you can look at the core of the business, which is automotive revenues, and say, well, yeah, that sucks. But at least our energy generation and storage revenues, flying to the sky, and at least services and other revenues flying to the sky, right? And if you look on a full year basis, energy generation and storage in 2024 was up 67%. Services and other revenue was up 27%. So that was great. But we got problems, folks. We have problems. So in the latest quarter, energy generation storage revenue is now down to 67% growth. From the previous quarter was at 113% growth, and services was at 31% growth year over year, now down to 15%. That's not even the worst part. That's a huge deceleration in both of those, like, cut in half type numbers. That's not even the worst part. Now we have to start comping against insanely tough numbers. So if you look at energy generation storage revenue, $3 billion it did in Q2 2024. The latest quarter we did $2.7 billion. So there's a decent probability that energy generation storage revenue is going to start going negative or very small growth rates. Oh boy. Oh boy. Services and other revenue, right? Now we're going to have to start comping against these quarters where we are $2.6 billion, $2.7 billion, $2.8 billion of services and other revenue. Look at where we are at in this latest quarter, $2.6 billion. So the moral of the story is here, we got brutal comps coming, and the revenue growth from these 2 massive growth engines is going to slow and potentially even start going down. So then what are we going to have to go off of? Like, oh my gosh, right? Now you got to understand.
Okay, so the second argument here, outside of the vehicle delivery volumes being down, is that the other parts of the business, Jeremy's losing a little bit of faith in, A, because the comps are going to get tougher, B, because they're just not going to be able to keep growing. Like, not even just the comps, but the raw nature of being able to grow the energy business or the services business as much as they're doing, which is a lot of the regulatory credits he believes is not going to be able to benefit from. So then I'm imagining he's going to attack the FSD and robotics argument. And if he just says, hey, those are too far away, that would be his thesis for selling the stock at 250.
The Biden administration was extremely pro a company like Tesla, right? Through their, what they called Inflation Reduction Act, IRA, right? This was something that benefited a company like Tesla in one of the most direct ways you could possibly have, right? And all of this is going to start to come to an end over this next year or 2. All this Inflation Reduction Act related stuff, right? And if you look at Tesla's battery production tax credits under the Inflation Reduction Act could generate up to $250 million per quarter. Tesla has been a major recipient of federal infrastructure grants for building EV charging stations. Tesla's energy generation storage revenue has benefited from manufacturing credits with a total of $756 million for the year of 2024, right? Huge. Like, that whole Inflation Reduction Act Biden administration did was so beneficial to Tesla. They made so much money off of that. That's all going bye-bye, folks. That's all going bye-bye, and that's not going to be good news for Tesla. Tesla was the 3rd largest recipient of these funds since the program started, right?
I don't know for sure if we're losing the $7,500 credit. Like, I know Trump said we were, but he hasn't done anything on that. Maybe Elon convinces him not to. I would agree, dude. If we lose the $7,500 incentive, I wouldn't have bought my Tesla if I didn't have that. So maybe Elon convinces Trump to not do that, but if that is a headwind Tesla has to face, yes, that would not be good for any EV company in the United States.
No bueno. Now that leads us to the biggest services opportunity. The biggest services opportunity for Tesla is seen as FSD, right? If everybody that owns a Tesla all gets FSD plans and pays $99 a month or $199 a month, right? That would be great. But from my experience with the FSD product, it's a good product, but it's not perfect, and it's more annoying than just driving your own vehicle, is what I found. You have to stay on top of it more. It does a lot of annoying things where it doesn't drive human enough, I would call it, and it's not a great experience. It's an okay or good experience. It's the type of thing that if I lived in LA and I had to drive to work an hour each day, it would be worth getting FSD. But outside of somebody that's in stop and go traffic all the time, I don't see it being worth it. And so that big services opportunity is unfortunately just the product's not good enough to at the end of the day.
I don't know. I'm 50-50 on that. I use FSD every day and it's great. Granted, I'm not in constant traffic every day, so I get it. There's a lot of nuance here, but I do think that's going to get better and better and better. That really is a real world manifestation of AI. And I think that is going to be something important. Now, do we get a ton of adoption on it? Not sure, but I think questioning the validity of the core experience reasonable, but I don't know if you can just write that off entirely.
Everybody say, I'm going to go buy this. And you understand, even when it's really a great product, it's not just good, even when it's great, a lot of people are still not going to want it because it's going to be an extra $99 a month or $199 a month. And a lot of people just like driving at the end of the day. And so that's a whole situation we got to deal with, right? So the only question is now with these growing categories that have been the growth engines of Tesla is how bad are growth rates going to get over this next year? Are we going to be talking about energy business going negative? Or are we going to be talking about single digit growth? People are used to 100% type growth rates. Now we could be talking about 5%, 10% growth, negative numbers, services revenue. People were used to 30% revenue up on a year-over-year basis. And now we could be talking about that services and other revenue might be up like 5%, 10%. Oh my gosh, what happens if it goes negative? Then what do you have to go off of, right? Insane. So to recap so far, off just these 2 points, we have a rotten core business and the exciting growth business is about to be no bueno. We got problems, big problems, folks. Number 3, it's a business without a purpose. And that is usually not a very good thing, especially for a company like Tesla that has a massive valuation, a business without purpose. So if we go back 10, 15 years ago, Tesla's like mission, like what are they here for, right? What is their purpose? What are they going after? It was very clear to transition the world to sustainable energy. We're going to save the planet. That was Tesla's pitch. Like, and even when I was investing in the stock back in 2019, it was very clear that's what Elon was trying to do. And he would even say that we're trying to transition the world to sustainable energy. We're trying to save the planet, right? It's like this big mission we're going after, right? That mission is dead. It's done for. Once Elon started to move more and more to the right into the Republican Party, we know the Republican Party does not take climate change or any of this stuff or sustainable. They don't take any of this stuff serious. We know that, right? And so once you start to align yourself with the right, your whole mission of what you were trying to do is now out the window. So now you have no mission, right? And me personally, I would say 80% of the people I know for voted Trump, right? Like I know a lot of people that are business owners, a lot of people with money. And I know like the media might try to like pitch things as like, oh, the left is the people with the money. No, trust me. Like the people that I all know in real life that have money, they vote right, okay? And so they vote Trump. They lean right? 80% of people I know. Of that 80%, I would say at least half, because I talk with these folks, like what their opinion is on this and this and this. I would say at least half of those folks believe climate change is a hoax, as in it's not real. They believe that fossil fuels are not bad. And you could burn all the oil you want, all the coal you want, and nothing bad's gonna happen. And that's a massive segment of the right. So it's clear as day, like that whole mission Tesla used to go after 5, 10, 15 years ago, it's dead. It's done for now at this point in time, right? So where does your mission go from here if you're Tesla? Well, you can say, well, we want to be Uber, but without the driver inside, okay? Is that passionate of a mission to replace Uber with no driver? Like that's like you're going from we're saving the planet, we're saving this beautiful thing that is Earth, that humanity has, to we want to replace Uber without a driver. Come on, man. You think that's a mission to go after? Like, what are we talking about here, right? I mean, what a step down. Like, we're going to save the planet to we want to be Uber? Come on. You say, well, we want to be an AI company. That's going to be our big mission. We want to be an AI company. You and everybody else. Who doesn't want to be an AI company? Every freaking big tech company wants to be an AI company. Every single one of them is pitching, we're investing all this money, we're AI. That's not some big mission to go after. Come on, man. Everybody's going to be an AI company, right? You say, we're going to make robots so you don't have to hire landscapers. You can fire your landscapers, right? That's not a great mission to go after. Come on. I'm going to make robots so I can fire my landscapers and fire my pool man and, you can fire your house cleaner and all that stuff, right? And plus, we know how this ends. You ever seen iRobot? We know how this movie ends. It's not pretty, right? It's not pretty how it ends. Come on, man. But by the way, I can't wait to fire my 10-year-old because, I don't think he's been doing a very good job of cleaning my fountain in the front yard. And I can't wait to tell him, hey, our robot's here to replace you, boy. You lost your job, right? And by the way, all you guys that are rooting for these robots and you're like so happy Tesla's going to be making these robots someday, which probably isn't going to be until the 2030s, by the way. It's not happening anytime soon. But you're so thrilled about this. Oh my gosh, can't wait to fire all these people. I can't wait to the robots take over. Listen, man, all I hear is complaints constantly from men that they can't get a freaking date. They're on these date naps. They can't get a date, right? Dude, you think it's bad now? Just wait till the robots are here. Wait till the robots are here. Oh my gosh. You think it's hard getting a date now? Just wait till the robots. They're going to beat up everybody. Women aren't going to need any protection from man anymore. The robot's going to handle that. Plus, they're going to not get tired in bed after 2 minutes like you guys. I need a jelly roll after 2 minutes, okay? Give me a chili dog. I'm tired. I need a chili dog, baby. Sorry about this. 4, okay? 4th point here. All our best customers hate us now. They all freaking hate Tesla. All our best customers. When you think about, like, why is Tesla $800 billion market cap, right? Why has Tesla had all this success? It's from 3 groups of people. Liberals, Europeans, and Chinese. If you look at who actually buys Teslas and who supported Elon and supported the brand all these years, liberals, Europeans, and Chinese. That's not a debate. That's a fact, right? And now the liberals hate Tesla with a passion because of all the stuff Elon's tweeted over the past number of years and all the stuff and all his sentiment and negativity toward liberals. Liberals, dude, like they have like the worst opinion of Elon Musk. And it used to be they were the biggest backers. It's flipped 100% now. The Europeans used to love Elon. They used to love Tesla. Boom, that's out the window. And the Chinese, because of now Elon Musk, basically connection with Trump and how those two are kind of tied. Now with all this negativity at China, oh my gosh, big problems, right? Now you think about some of the situations that have happened over the years that really hurt a brand and hurt a company or business or whatever, right? The Colin Kaepernick situation was very negative for the NFL over the next several years. And, I feel like the NFL's kind of moved past that now, but it was an overhang on the NFL because of, how some people felt that they boycotted the NFL for years. I don't want to watch NFL because of the Colin Kaepernick situation, right? But now look at Bud Light sales numbers over the past year or so. Awful, very big negative thing that happened in regards to Bud Light. Target wanted to sell some items that, some people weren't too fond of, and it hurt Target sales massively, right? Let me be very clear. Those situations were child's play in regards to their brands compared to what Elon Musk has done to the Tesla brand now at this point in time. This is like a nuke compared to like a little BB in terms of these other situations. These are like the warm-ups, and Elon Musk is showing us here's how to absolutely devastate your brand, right? Absolutely incredible. Now, if you look at the Tesla sales drop in Europe, it's dramatic. It's dramatic. Country by country, you just go through it, man. And keep in mind, next quarter is going to likely be even worse in regards to this. And if you think this is some quick fix that Tesla's going to magically, be able to fix this, or Elon Musk is going to be able to magically fix his brand, and all of a sudden the liberals are all going to love Tesla again, and all the Europeans are going to love Tesla again, and the Chinese, dude, it's going to take years to rebuild the brand. This is not going to be just forgotten. The Europeans are not just going to forget about all this stuff that's happened. The liberals are not just going to forget about all this stuff that's happened. The Chinese are not just going to forget about. It's going to take 5-10 years to recover the brand, if that even happens. And it's no guarantee that that's even going to happen, by the way. But this is
okay. 5 to 10 years to recover the brand. I can understand that argument. I don't know if it actually is going to take that long. I mean, I get it. There's definitely a hell of an argument to make that the brand has gotten hit pretty badly, and a lot of people will just never do or buy anything that Elon makes. I do think if the cars keep getting better, FSD keeps getting good, if they can get that cost per mile down to $1 and the robo-taxi starts expanding, I don't know. I think there's a world where the brand damage isn't that big of a deal, but I could see the argument that it'll take a while. I just don't know if it takes a decade for the brand to recover from this.
It's going to be it's just going to magically, happen. And if you think all the conservatives are all going to trade in their F-150s and their Silverados to go drive a Cybertruck around, I got news for you. That ain't happening. Part 5. We have a part-time CEO. And this was the last straw. I was hoping on that conference call, Elon was going to say, I'm fully focused my attention on Tesla. I'm leaving Doge, all that stuff behind. No, we have a part-time CEO. Now, it was a great saying. You might have heard this before, especially if you're involved in sports, right? Hard work beats talent when talent doesn't work hard. And we have a CEO at Tesla that no longer works hard at Tesla, right? Once again, not up for debate. It's a fact, right? Now, if we don't talk about Tesla prior to Rona, right? And we think about where Tesla was prior to Rona, prior to 2020, basically the time period I was investing in Tesla back in that 2018, 2019 timeframe, right? I could confidently say that Tesla at that time was 5 to 7 years ahead of US and EU competition. So you could put them against Ford or GM or Volkswagen or Toyota or Honda or Hyundai or Kia or whoever you want to put them against. They were, 5 to 7 years ahead. We'll just call it any competition outside of China. Let's just call it that, okay? Because even the Asian competitors, 5 to 7 years ahead, ex-China, right? Now, in terms of strictly China, back then, I would say Tesla was about 3 to 5 years ahead of the competition in China at that particular time, right? So we were way out in front, and there's a reason I'm showing Steve Jobs there, because it was always, Steve Jobs was always trying to have Apple back when he was at Apple. He always wanted to have Apple not just ahead of the competition, he wanted to have them years ahead of the competition. It wasn't good enough to just be, our tech is here. No, he wanted to be 5 years ahead, and it used to be a famous thing that Steve Jobs would have Apple 5 years ahead of the competition, right? Here's where we're at now, in my opinion. We're only 1 to 2 years ahead of the non-Chinese competition. I'm looking at many of these EVs that are coming out that I could buy now in the US, and I'm looking at the range of the vehicles, the specs, and I'm like, oh my gosh, this is not far off of Tesla. And some of them are actually even slightly ahead. So now we're at a moment where I feel like the competition is catching up in a major way in regards to the non-Chinese competition, okay?
Do you guys agree with that? Do you think the BYDs and all the other EV companies, the Rivians, the Polestars, do you think they will meaningfully make a dent in terms of someone who wants to buy an EV switching from a Model Y, which is the best-selling car in America, to whatever brand or model the BYD comes out with? I mean, I haven't seen evidence of that, but obviously if that is a bare thesis one is thinking about, then yeah, that would create a lot more competition for Tesla vehicles.
And at this point in China, I can't even confidently say we're ahead of the competition anymore in China. I cannot confidently say that. When I see the product that's out there in the Chinese market, I cannot say we're ahead of the Chinese. No, not anymore. So we have blown a lead. This is like when the Patriots played the Falcons and the Falcons blew that crazy lead in the Super Bowl. That's how I feel in regards to Tesla. I'm like, dude, we were so far ahead of everybody. It wasn't even close. Everybody was considered a joke compared to Tesla. We used to laugh about the competition's coming. We used to laugh about it. But then when you take your eye off the prize for several years, you know what happens? The competition that used to be a joke actually starts to catch up and actually starts to get there. And you're like, freak, man, we were celebrating popping champagne. And meanwhile, the competition kept working, kept focused, and it happened, right? And so what happened here? Well, Elon Musk took his eye off the ball, right? I would say things really started to go south when back in April of 2022, which is 3 years ago, right? Musk made the offer to buy Twitter. At that moment, that's when Elon Musk's attention started to be diverted away from Tesla in a substantial way, right? And all of a sudden he started focusing on X and that acquisition and then trying to get X and cleaning out the employees. And he brought the sink into the office and all the stuff that happened there, right? And then he started moving more and more toward political tweets and started moving more and more to the right. And just, it was clear as day, like this man is not spending a good chunk of time at all on Tesla anymore, right? No, if you think about Elon, right? Elon made his money 3 big ways, okay? His first big way of making money was actually from a company he started, which was kind of like an online bank. Back when that was like not even a big thing, he saw an opportunity there to basically kind of create an online bank, which then later merged with a digital wallet company that ended up becoming PayPal essentially. So he saw this like vision before other people saw it, had little to no competition, and was able to go in there and create a big business and got a windfall of money from that, right? The second way he made a ton of money is SpaceX, right? No competition once again. SpaceX had no competition when they were doing all that stuff, right? Like there wasn't like, it was this company, right? Blue Origin obviously has been something that's gotten more popular over the past 5-7 years, Jeff Bezos' company. But at the end of the day, like SpaceX really had no competition. So if you look at these ways of making money, no real competition there he had. He had no real competition when it came to SpaceX. And then Tesla, same exact thing. Like everybody didn't start even taking EVs serious until really the past few years, right? And so Tesla for the longest time had no serious competition. So Elon made his great fortune from all these things that he would see before other people saw it, and basically had no serious competition at all. Well, that's changed now, okay? If you look at like Twitter, for instance, he bought that. It was valued at $44 billion. The valuation's gotten supposedly all the way down to $12 billion. We don't know, how low it's gotten. They're talking about maybe it's back to its old valuation of $44 billion now, right? But the moral of the story is Elon Musk, it doesn't look like he's made any money from X at all over the past 3 years of owning that, right? It's tough to compete with the big dogs.
He's right about that. XAI just bought X for basically $44 billion. There's about $12 billion in debt that XAI took on, but Elon has not made any ROI from the actual acquisition of X. Now, maybe XAI ends up incorporating the data and that gives him the ROI, but X itself has not competed with the Instagrams or the Facebooks of the world.
Compete head to head with Meta. He's got to compete head to head with the Chinese with their TikTok app in those sort of social medias. He's learning like, oh, it's tough when you got to compete with big dogs, right? Additionally, no, we're going to go into this rideshare market that he talks so arrogantly, cocky about. He thinks, Tesla's won. You just hear it in his voice. He talks so cocky, right? And he's going to now have to go head to head with Google with infinite amounts of money coming out of their head. They don't even know what to do with all the money, right? He's going to have to go head to head with Google, and Google doesn't lose. Ask Apple. Steve Jobs,
Okay. Google definitely lost to ChatGPT, and Google invented the transformer technology, which is the T in GPT. So I wouldn't be that confident to say Google and Waymo are going to stomp all over Robotaxi. Now, is Waymo beating them right now? Yes, because Waymo's expanding and Robotaxi is not even in Austin yet. But I don't know if you can just say Google doesn't lose, because we've seen over the reason their multiple is so cheap is because they've lost a lot over the past couple of years.
Put Apple in a great position with iOS store, right? And Apple's product. At the end of the day, Apple still ended up losing the war against Google. Google ended up with by far and away the bigger market share with Android than Apple. So Apple still has a very successful business, but a very small market share, across the world, right? He's got to go head to head with Google. This isn't like some market that there's no serious competition. No, there's serious competition. And Waymo's in the market today with vehicles today that will drive you around with no driver inside. Something that Tesla hopes to eventually do at some point this year. Waymo's been doing this, and they're expanding rapidly. Additionally, he's going to have to go head to head with Amazon as well. There's these Zoox products that are in the market. These drive all over the Las Vegas Strip. If you're going to Las Vegas Strip, you'll see plenty of these. It's the city I live in, right? He's going to have to go head to head with Amazon. Amazon's got money coming out of everywhere, okay? He's going to have to go head to head with Amazon. Like, this is serious competition. This isn't like when he was, trying to create PayPal back in the day and there was no competition. SpaceX had no competition. Tesla had no competition. No. Now you're going direct against Google and Amazon. Oh, and there's that one company. I forget about them. Uber. You think Dara and Uber is just going to go laying down and say, oh, you guys can take us all over. We got 70+% of the market share, but no, here, you guys just take it all. No, of course, Uber is going to fight with every muscle in their body to make sure they survive, right? And do whatever they have to do so they don't end up with a market share of 5%, in 10 years from now, right? This is serious competition they're going to have to go with, right? The days of Elon Musk sleeping on the factory floor are long gone, right? Now, this is a much bigger point I'm about to make here that you got to really understand on a high level, right? When you have a leader of an organization that is a part-time worker, your workforce, you're going to get part-time results from your workforce. In order to have a great whatever behind you, whether it's a team or whatever, they got to feel like the leader works his butt off and is out there every day focused on this thing they're going after, right? I don't think there's anybody that works at Tesla, and I know, a good amount of people that work at Tesla. I don't think there's anybody that works at Tesla that really feels like Elon Musk is at all focused on Tesla, which leads a workforce to not really rally behind their leader. What is your motivation to do amazing things or work super hard when your leader is just a side project for him, right? There's not a lot of motivation for you. It's very different than Tesla 5 or 10 years ago when everybody was going after this big goal, when the company had his back against the wall and had this small valuation. You had a leader that was like, I'm going to sleep on the factory floor if I got to. I'm going to do whatever it takes. I'm going to work 7 days a week here if I got to. Those days are long gone. And that creates a workforce that's not very incentivized. You want to go to war with them? Of course not. Imagine Phil Jackson, great, NBA coach, maybe the best ever, right? Imagine if he was just like, part-time coming in, you think Michael Jordan would have won all those championships and Kobe Bryant would have won all those championships if Phil Jackson was just a part-time coach? No. Think if Bill Belichick was just a part-time NFL coach and was just part-time in it, you think the Patriots and Tom Brady would have won all those Super Bowls? Come on, man. You got to wake up at some point in time. You got to understand how business works. You got to understand how a workforce is motivated or not motivated. And if you feel like your CEO's part-time in it, why are you going to give great effort? If you're an executive, why do you even want to work for Tesla? Your fearless leader is a part-time CEO, a part-timer, right? That's probably looking for yes men around him and a yes men board of directors. And then you get yes men results, right? That's what happens. And that's important you understand this. And you got to ask yourself, like, why did this happen? Well, if you're Elon Musk, your net worth is $355 billion, right? People will buy and hold your stock regardless of how trash your numbers are. You could post bad numbers after bad numbers after bad numbers after bad numbers after bad numbers. You could just say, we promise in this, we're going to do this, we're going to do that, even though, we know these things don't work out. If people are willing to just continue to buy your stock and hold your stock no matter what you do, where's your motivation? It's like welfare for the rich, I would call it, okay? So there's if you're on welfare or some sort of government assistance, people always say, like, where's your incentive to work? Because the government's just giving you money, right? The government's just giving you money. Why are you going to work? This is the same exact thing for somebody like Elon Musk. It's just we're doing a welfare for the rich. Where it's like, where's his incentive? Like Tesla has like an $800 billion valuation, even though their numbers are garbage. The core business is rotten. The growth businesses are about to tank, right? They're behind competition now in several different key areas, and they're about to try to go to battle with a part-time CEO against some of the biggest companies in the world. Good luck. And so that's why this has happened. That's why Elon Musk, at the end of the day, like, where's his incentive? If Tesla stock was a $50 billion market cap, I can tell you, Elon Musk's incentive would be very, very different. But when people will buy your stock and hold your stock, no matter what, you could just say, oh, we're going to be creating a billion trillion robots, and we're going to win this. If people just believe it, like they're just going to continue to hold, and like at the end of the day, it's just welfare for the rich, right? Next up, what would it take for me to buy Tesla back in future years? I don't know, man. I don't want to say I would never own Tesla again, but like I just have trouble seeing like how they're going to. Because let's be very clear, Tesla's a turnaround company now, and that sounds insane to say, but it's the truth. The core business is broken. The growth businesses are about to go to very small growth rates, maybe even negative. It's a turnaround company. And so with turnaround companies, you got to get them for dirt cheap valuations. Does Tesla have a dirt cheap valuation? Absolutely not. The 4Ps, the price sales ratios, all that stuff is insanely high. So the valuation we need to come down so dramatically from here. I'm talking like a 70, 80% crash to make me say, you know what, this is worth me throwing some money in. Or I would need to see Elon go full time back at Tesla again and put in like crazy work, crazy effort, and get the whole workforce re-energized. I mean, it needs to be dramatic though. It's not like there's a small, like Tesla stock falls to 190, I'll buy. No, I wouldn't buy Tesla. I wouldn't buy Tesla today at 120. The stock could fall 50% from here, and I have 0% interest in buying Tesla. Things are that bad, factually, with the company. So, I'll never say never, but man, so much needs to happen for me to, even buy this one. So goodbye, Tesla, my Tesla.
All right, folks, there we go. That was Jeremy's argument on selling Tesla. Again, he was one of those OG shareholders, bought it at around $13 basically a decade ago, and sold the remaining of his shares at $250 today. Look, I don't think he has horrible arguments by any sense of the imagination. He's got a lot of numbers, a lot of data, etc. I wouldn't be one to say they're horrible arguments. It's just if I had a $13 average and I am in, Jeremy's what, like 32, 34, right? He's in his early 30s, mid 30s. Like if he's going to be investing for the next 40, 50 years, I just feel like unless he has some amazing opportunity to take that capital, that 200,000 he got, and put it somewhere else, which maybe he does, right? And maybe that massively outperforms Tesla over the next couple of years. But even if Tesla's dead money over the next couple of years, given the margin of safety, given his average is not 215 or 220 or 250, even if it's 13, Tesla would have to drop so dramatically for him to be negative on the position and feel that the opportunity cost of the position outweighs the potential of the position. Is it trading at a crazy multiple? Of course, but Tesla's always traded at a crazy multiple. So it's like when it was going up 20x in 2020, it's not like they were growing 20x. They were growing, but they weren't growing enough to justify 2,000% returns. But it's Tesla, and it became a brand that everyone got obsessed with. It created this cult following, and I personally would just hold it for the next decade because I, A, believe in the Optimus story, which is like really 90% of my conviction on Tesla. B, you've got FSD, and then C, hopefully the auto business turns into something. But if it doesn't, you've got two other big verticals that theoretically should take it to the next level. And this is kind of just ideologically how I just think you don't bet against Elon when it comes to Tesla. Yes, he's hurt the brand this year. Yes, he's had a ton of issues. Obviously, the core business sucks. Jeremy did a great job going through the core numbers, explaining the headwinds, explaining the comps. And And could I see Tesla going below 200 eventually, especially if Q2 is really disgusting? Yeah, of course that could happen. But I also just think given he got in so early, unless there is a unique opportunity cost, AKA some stock that he's just like dying to put that capital, that 200 grand into instead, I personally wouldn't have done it. But I understand for someone to do it. Like, I absolutely understand for someone to take the profits. Also, he was up 2,000%, 1,800% or something. I mean, like, you can't blame someone for taking those types of profits. But I didn't buy Tesla at 13, so it's not my decision. It's his decision. 62% of you say you agree with his bear case. Well, here's another question. I think this is even a better question. If you had a 13 average on Tesla, would you sell here? That's a little bit different than do you agree with his bear case? This is more so, hey, and think about it for a second. If you had a $13 average on Tesla, knowing what you know about the potential of the business and knowing what you know about the, one could argue, absolute insane valuation that it currently is at right now, would you sell at these levels? Would you sell at these levels and get out of here? But to Jeremy's credit, I mean, he makes an exceptional argument about the numbers. The competition point, a lot of you guys said in the chat, BYD is becoming a real competitor. My uncle, who's in Singapore, has been telling me this as well for the past couple months now, that BYD is like legit. They're expanding to Malaysia. And he used to live in Malaysia before, so he's had a lot of experience seeing them on the road. Sachin, also a friend of the channel, he lives in Malaysia. He's seeing a lot more BYDs than usual. If they start coming to America, which Trump would not be happy about, but if we start getting real Chinese EV competition in America, I mean, yeah, you might have an argument for why Tesla, I mean, just isn't the top choice by consumers. The Model Y, I love that car. I drive it every day. Granted, I'm not a car guy, but if I was a car guy who wanted to try out other EVs, I'm just lazy when it comes to these decisions. I want to make it as, I want to make a decision as quick as possible. That's why I got the Model Y. But for other people that are more conscious consumers that want diversity in their choices, I mean, if you've got better choices, yeah, that could definitely be something that could affect Tesla. So I think there's a fair point for him doing it. I just, I don't know. I don't think I personally would have done this. 52% of you said yes, you would. Okay, so about 60% of you said you agree with his bear thesis. About 52% of you say you actually would have sold your shares at that $13 average. Futures are flipping green. That is correct. Futures are flipping green. Here's another argument against why potentially the sale might not be the best. I mean, look, at the end of the day, we're all investors, right? We want to make money. If there's a world where the markets go crazy bullish again, I know it's hard to see, but like it was pretty hard to see that Trump would do the pivot yesterday, and he did. And Tesla gets to 300, 350 again. Not saying that's going to happen. I'm just saying if you get a lot of that momentum, maybe there's a bit of a better exit price he could have had in even more euphoria than at these levels. But when he said at the end he wouldn't buy at 120, that was surprising to me. Because honestly, I would start buying it around like, I don't know, 175, 180, 150. I would get even more excited about it because I think the optimist thesis is real. I think the bot thesis matters. Now, could you question Tesla's execution given the delayed timelines they've had for pretty much everything? Yes, that's fair. And Jeremy knows that better than anyone because he's been in the stock for so long. But I do think Optimus is going to be a big deal. And because I think it's going to be a big deal, I don't know, it would be worth taking a bet on it if it gets all the way to 120. So if he needs to see this thing get below 100 to buy, I don't think we see those prices. But if we do, then I guess that would be the opportunity. All right, cool. I think that's it for me. Thank you, everybody, for being here. Appreciate you all as always. We will have the daily recap coming out in a couple hours. Market open again tomorrow. Market close will be early tomorrow because I have a flight a little bit later in the day. So we'll have to end it at around 4:20 tomorrow, but we'll start at 3 p.m. Here is the Toronto form to sign up. Again, for those that want to sign up, this is probably the last time you'll get a chance to sign up. I will send all the details, but Saturday, Tanner and I will be in downtown Toronto, and it'll be a fun meetup for anyone who wants to come through. All right, cool. Thank you, everybody. Exciting, volatile day, as always, but we will be covering the markets every single day to try to navigate all this volatility. Thank you, everybody. Appreciate it. I will see you guys tomorrow on the Market Open. Bye, everybody. Have a good one.